છે મારું જો મારું લેક્ચર પહેલા હશે તો લેક્ચર પછી કાચ ખાલી હવે કાચ ખાલી આમ જ ધોવા સાફ જ કરવાના છે બીજું કાંઈ નથી. જો હોય તો
મોટો જતો તો હા હા
Yeah, okay, done. Start. Yeah. Hello, good morning, everyone. Good morning to all. Today, there is a special conclave meeting the experts think tank. A very warm welcome to all participants. Myself, CA Manish Mahendra Sanghvi, from a think tank multidisciplinary global platform. Chapter leader welcomes you all to Think Tank Global Conclave for India Growth Story and Meet the Experts series covering in detail management think tank, valuation think tank, IBC think tank, financial reporting think tank, REVA cooperative think tank, FAFP ISA think tank, IPOs think tank and capital markets think tank as a major part of think tank at Vivek.patra. Vivek in Sanskrit means knowledge and wisdom. Patra is innovative news updates containing slides on sharing latest developments and real life examples by CEO, CXO, CFO, specialists and professionals with a global experience. Today, we have a think tank multidisciplinary global platform, special meeting for all stakeholders in finance, corporate affairs, industry and profession. Think tank has been in existence since over decades. Idea for conceived on 6th January 1991 to have conferences conclave with CEO, CXO, CFO panelists and specialists sharing their experience and real-time examples. Our panelists are finance leaders working in reputed companies or profession since many years and have deep domain knowledge. Think tank platform, now digital, has got overwhelming response globally on digital mediums and expanding rapidly through LinkedIn, in Facebook, etc. Our participants and experts have a rich experience in industry and profession who have done ICAEW, CPA, CFA, CFP, IIM, CA, CS, CMA, ISA, DISA, FRM, IFRS, BTech, Masters, PhD, sharing experiences, knowledge, wisdom spreading as a reach out initiative globally through www.thinktanks.co.in, and in spite of the limited resources, due to overwhelming response to our annual report, corporate strategy and ESG, we have announced 6P awards and recognitions, that is profit, people, planet, professionals, promoters and platform. For corporate annual reports, analysts, professional achievers, CEO, CXO, CFOs with a very respected jury with a rich experience in interaction with stakeholders and boards. Their recognitions and awards would be announced with a rigorous process of scrutiny and choice and interaction with the participants. As participants are aware, recently we have launched a much awaited reference appropriately titled Think That Tank Vivek.patra India Growth Story, a comprehensive conference material compilation over 600 pages, sharing experiences by CEO, CXO, CFO, specialists with latest developments and series on blocking, regulatory, frauds, Ind AS, financial reporting, IBC, taxation, digital capital markets, technical analysis, ISA, bank audit, corporate affairs would be available for subscription and ethical contributions by well-wishers, etc. We will also be covering important and latest developments as suggested by many participants in coming weeks, example, valuations and financial modeling, health is wealth, cyber security, blockchain, MSME, latest regulations and development in various important professional bodies and institutions. We all request all to subscribe to Think Tank YouTube channel for watching summits, conclaves, webinars and joint connect and network on Think Tank webinars group on LinkedIn and Facebook pages, Telegram channel specially created on suggestions of many participants and panelists. We once again welcome all members and panel share few insights on Vivek Think Tank at patraindia.story. I specially thank my colleagues into the digital global team, Anupam, Aditya, Ajay, Anurag, Archana, Aishwari, Dushyant, Hemant, Mitesh, Mihir, Malvika, Manish, Nipun, Pramod, Praveen, Rakesh, Rucha, Pramod, R. Kannan, Santosh, Subrat, Snehal, Sandeep, Sanjeev, Unmesh, Vijay, Vikas, Vikram, Yogesh, and others for regularly contributing to Think Tank. Today, we have an excellent Think Tank multidisciplinary platform, seminar, eminent stalwarts and specialists sharing experiences and latest developments. Let's have an interactive event. Thank you all. We are once more time, we are welcoming everyone. Thank you for joining. Manoj bhai, you would like to say something, or Nilanjan, you would like to say something from to start with?
Nilanjan,
Yeah,
can you say a few words? Then I think we can have a presentation of the delivery business model.
sure. So just to briefly talk about, we have a session today on the new reporting requirements. We hope that you all like this because this is a new and engaging requirement which has come up, and it not only involves us as auditor but also as the preparer of the financial statements. From a user perspective, that is also have wide repercussions. So we will kind of talk about that. And as an introduction to myself, I am Nilanjan. I am a chartered accountant with 15 years of post-qualification experience, and I work on dealing with various accounting and auditing challenges. So with this, maybe Manish, you can take it forward from there.
Yes, sir. Thank you. Today we will, see the recent IPO gone. Last day or yesterday. Delhivery Limited. Though it's a logistics company, but not only logistic, but it's a lot of a technical, software and technical things. So basically, I call it a technical company. So let's see their model, their finances, and what exactly they do. Though IPO is over, this is a good reference for future investments. So I'm starting with, my name is Manish Sanghvi. I'm a chartered accountant, passed way back in 1995, having a corporate experience. So first slide, topic delivery, topic is Delhivery Limited, Delhi. So this company was started in Delhi. So they kept a name Delhivery. So delivery is a short form of Delhi plus delivery is a delivery. This is our standard slides, our names of all digital global team members. These people help us basically for this to have this seminar every Saturday, and these people are contributing time to time. This is our standard disclaimer. We are just doing for education purpose. We are not telling anybody to buy the shares, or we are not doing any financial planning for anyone else. So everybody has to consult their financial consultant, share brokers before investing. Company details: Delhivery is a Delhi-based company, and it's basically there are no promoters, but company is being promoted by all technical people and professionals. So there is no concept of promoter in this company. About the company, Delhivery provides a full range of logistics services, including delivery of express, parcel, and heavy goods, PTL freight, TL freight, warehousing, supply chain solutions, cross-border express, freight services, and supply chain software. PTL freight means part truckload, and TL means truckload freight. The company also offers value-added services such as e-commerce return services, payment collection and processing, installation and assembly services, and fraud detection. Delhivery is the largest and fastest growing fully integrated logistics services player in India by revenue as of FY21. The company has proprietary technology systems that enable it to the integrated logistics services to a wide variety of customers. Its technology stack consists of over 80 applications for all supply chain processes. The company has built a nationwide network servicing of 17,000 PIN codes in the 6 months ended June 30, or 88% of 19,000 PIN codes in India. So basically, what is the difference between logistics, any ordinary logistics company, and Delhivery? This Delhivery only not provide a logistics services, but it also give you a technological solutions. It also provides e-commerce services. And the best part, it has covered almost 88% of the PIN code of India. So one can understand that how much area they have already covered in so much small lot of means it has covered a lot of big area in small portion, small time of this. So definitely this company model is different than the logistics company. The company, it has 164 network infrastructure, includes 124 gateways, 20 automated sort centers, 83 fulfillment centers, 35 collection points, 24 return processing center, and 249 service centers, 120 intermediate processing center, and 2,235 direct delivery centers as on June 30, 2021. So it has covered a wide range of the country. The company has engineering, data science, and product team of 474 professionals. The company served a diverse base of 21,000 active customers across e-commerce, consumer durables, electronics, life cycle, FMCG, industrial goods, automotive, healthcare, and retail. So we can imagine that company is basically, catering to so many customers, which includes maximum of the corporate customers or company customers or commercial customers. So they have reached to the ultimate customers also. The competitive strengths are, they have a lot of rapid growth and extensive scale. The scaling is very big. The proprietary logistics operating system is best. They have a vast data intelligence capabilities. Their network design and engineering is very good. Their integrated portfolio of services is probably the highest, bigger than anybody else. Strong relationship with a diverse customer base. Extensive ecosystem of partners enabling an asset-light business model and extended reach. Highly qualified professional team. So they have a competitive strength is very good because they have a lot of professionals inside the companies. What is the purpose of the IPO? As I said earlier, IPO was between 11th May to 13th May. It has closed yesterday only. The response was very poor. Out of total IPO value, 76% is offer for sale. They just wanted to use the funds for organic and inorganic growth. And inorganic growth through acquisition and strategic investment. So they will buy companies and they will buy technology for inorganic growth. Face value is 1 rupee. IPO higher band price is 487. Issue size is 5,235 crores. Fresh issue is only 1,235 crores. Offer for sale is 4,000 crores. So you can imagine 76% money will go to the, I would say, the existing shareholders, and one can apply minimum 30 shares. Retail shares were only 10% of the total public issue. So out of 5,000 crores, almost 10% was retail shares. So I would say immediately on listing, there won't be a big selling. There won't be a big profit making. Only thing is that what price these shares will be listed on the stock exchange is a big question, because IPO response was very poor. Till yesterday 12 o'clock, it was only 0.50 times was only over subscribed. But ultimately QIB has applied a lot of shares. and it was something just above one time is oversubscribed. What is the Indian logistics sectors? The Indian logistics sector had a direct spend of 216 billion USD in fiscal 20, which is expected to grow to US dollars 365 billion by fiscal 2026. So there is a almost 50% growth estimation in 6 years, driven by strong underlying economic growth, favorable regulatory environment, improvement in India's transportation infrastructure, growth of domestic manufacturing and digital economy in offline commerce. We all agree that this government has taken a lot of steps for increase of infrastructure by building so many express highway. So many airports have been built in like 6 years, which has improved the air connectivity. And this all logistics sector use aircrafts also for their movement of their goods. The industry is fragmented with organized players accounting for approximately 3.5% of market for road transportation, warehousing and supply chain services. This is expected to be 12 to 15% in fiscal 2026, implying a CAGR of approximately 35% between fiscal 2020 and fiscal 2026. So they are estimating the share of organized will increase much faster than the overall industry, logistics sector. So that is why the organized player will have a more benefit. This is the snapshot of this company. They have revenue of 36 billion, so I believe 3,600 crores. They have more than 17,000 pin code they have covered. They have more than 1.2 billion express parcel shipped, 22% e-commerce parcel market share. So whatever transactions are being done through e-commerce websites, 22% are being handled by this company. They have more than 11,000 network partners. They have more than 14 millions, so 1 crore 40 lakh square foot space logistic infrastructure with them. They have more than 160,000 truckload trips completed, more than 23,000 active customers, and their team size, direct and indirect employees are more than 86,000. So one can see that this company is working on the large scale. Only problem is that these people are not able to achieve the profit as anticipated. If you look these figures, you will feel that company must be making a lot of profits, but that is not the case. It's exactly reverse the case. As we see how they will use the IPO funding, it's basically organic and inorganic growth. This is the past performance. All the figures are million. So we can see that current equity capital is around 21 crores. And they have issued a preference shares of 442 crores also. Their net worth is 5,900 crores as on date. Total income is 4,900 crores. The loss for the current 9 months is 891 crores. And the EPS is around negative 15 rupees. The net asset value of 93 rupees. So they are asking 487, roughly 5 times that, 5 times then the net asset value. Total borrowing is 370 crore, which is this is a good sign that company have no borrowing. So company doesn't have to pay much interest. Only good thing is they have to increase EBITDA. If EBITDA increases, definitely this company will be profitable. This is key financial performance. You can see pin codes. I just want to see 2021 figures. More than 17,000 pin codes they have given. Number of gateways, all these figures we have seen. Only thing is, if you see EBITDA is out of revenue of 4,800 crores, EBITDA is negative 2,231, which is a you know, their company has improved their performance lot compared to in 2021, 9 months compared to 2019 and 2020. So it's a you know, good thing. We hope that company makes a profit. This is the revenue stream. You see revenue from express parcel, revenue from part truckload services, revenue from truckload services, revenue from supply chain services, and revenue from cross-border services. So these are 5 revenue stream company is earning money from there. Good thing is, if you see that figures of March, full year of March 2021 was 3,600 crores, whereas 9 months it is 4,600 crores. So roughly current year's turnover would be more than 5,500 crores. So definitely the EBITDA margin will improve in last quarter. These are the companies these people have time to time acquisition they have done. MMX India, Prima Sailor, Road, Piper Technologies, FedEx Express Transportation and Supply Chain, Spoton Logistics, Transition Robotics, Falcon Automat, Autotech Private Limited. So both the things are, they have you know, acquisition. They have made acquisition of logistics company also and technological based company also for the inorganic growth. Comparison with listed companies, I personally would say that it is apple to apple comparison is not there, because Delhivery Limited has a different model compared to Blue Dart, TCI, Mahindra Logistics. But this particular industry is carrying very high P ratio. Blue Dart P ratio is 150 times today, and Mahindra Logistics is 119 times. Even if you pick up TCI Express, which has a P ratio of 66, so we can say that this industry is working on very high P ratios. Probably Delhivery Limited has to make a profit. These are another small comparison of the 4 companies in terms of market capitalization, enterprise value, and in terms of, you know, enterprise value versus annualized return. So these figures are more important because their revenue, somebody is making drawing in our this revenue of all 4 companies. If you see, revenue of Delhivery is very high side, highest among all these things, and it's making a loss. Most important things, key employee salary increase. You see, year ended, the Sahul Bavia was having salary of 4 crores, and in 9 months they have paid salary of 35 crores. So something which is, I have seen that this company, they have increased their key managerial salary manifold. This is actually not good actually. Earning per share is negative since last 3 years. So company has never made profit. Obviously, their cash flow is negative because making losses, rather they are making losses on EBITDA level. In 2021, company has issued existing shareholders bonus issue in the ratio of 9 equity shares for 1 equity shares hold. So it's very good. It's a benefit to the existing shareholders, and they have also split the shares from 10 rupees to 1 rupee. So one can say that जिसके पास 10 रुपए का एक शेयर था एग्जिस्टिंग शेयर होल्डर के पास, इसके पास 1 रुपए एक शेयर का 100 शेयर हो गया. Return on net worth is negative, but it has improved compared to March 19. It has improved. Company doesn't have PE ratio because it's making losses. But as we see that this in logistic industry is working on a very high PE ratio. Net asset value is today 93 rupees. They are asking 5 times from the market IPO value. These are the cost of selling shareholders. You see, investing, selling shareholders got the shares at 139, 142, 196. And the individual shareholders who has promoted the company, according to me, they have got, let's see, Mohit Tandon has got only at 0.10 paisa. एक 10 रुपए वाला शेयर का 100 shares बन गया तो the cost has come down to 10 paise per share. So 10 paise का 487 rupees बन जाएगा. How much money they have made? These are the equity shares held by the key managerial personnel. These are all KMPs in the company. These are the shareholders holding more than 1%. So we can say that investors are holding almost 40-45% of the shares of this company. This is the worldwide players in logistics industry on a different indicative set like express parcel delivery, part truckload, full truckload, supply chain services. If you see in India, delivery is everywhere in all the 4 segments. And so that way, if you see, there are chances that delivery may provide a good revenue and good profits in future. This is their business model, the business model in US, China, India, vis-a-vis US, vis-a-vis the business model of delivery. Delivery is using a mesh network. They have asset-light leased infrastructure. They all infrastructure are mostly leased. They have a fleet also leased, but ownership, selective ownership of strategic assets. Automation, they have a high degree of automation with full control over the value chain. So delivery has a very good business model. The direct manpowers are almost 15,000 people, out of which 90% are working in operations and network design. So with this, our presentation is over about delivery. Anybody wants to?
I would share a few observations.
Yes, sir.
One is the company management so far has done exceedingly well in terms of creating wealth for themselves.
Yes.
If they get money in the IPO for what they are selling, even listing at a issue price or at a discount also would create great money for them. Second thing is the slides give a very good indication based on RHP deep dive about the business model of the company, the technological progress so far, and also the international scale of business and the type of players. Now, number one is the company management says opportunity size is huge. It is only 1.5% market share. And it has a potential to multiply. If it does, fine, it's great for India. Such companies also can contribute. Basically, their contribution is in technology and this top e-commerce players like Flipkart, Amazon, Jio, etc. So, although they have not disclosed the customers' names and business from each, but the e-commerce segment constitutes a large portion. Now here profitability is very important. This profitability parameters, it shows it's making losses consistently for the last 5 years. Even EBITDA losses are quite huge. So this type of valuation, doesn't it reflect market exuberance days? Now the ground realities are different. So this new age platform companies, they valuations have come down effectively on their knees. So that is an interesting point. And possibly when the valuations become more sensible after a few months, we can have a relook again at the company and its changing, evolving business model. We have to keep in mind Mahindra Logistics has a good model, but you see the market cap. Of course, now that is again innovative company and old economy players and all. Even good businesses like Blue Dart, it shows the aggregate. This company is having a much ambitious pricing model, and advantage goes to the foreign players. Doorbell is there. It shows a significant portion, right? Over 20% of capital. So they are benefited because of pumping in money by such people, and who will ultimately cash out at big profits. But the new players and new anchor players and the people who are applying in the IPO, so they should, I hope they benefit from the deep dive we are doing.
So Manish bhai, Santosh here.
Good morning.
As usual, good morning everyone. I think as usual, very
put on
good.
a video, na? Santosh, can you put on a video?
Yeah.
Welcome.
Yeah. So as usual, very good, very insightful presentation, Manish bhai. A couple of questions from my side. Probably I joined later, so you may have probably already covered it. But
No,
with 4,600 crore turnover, their market size, their market share is just 1.5%. So, and Mahindra Logistics and Blue Dart, what you showed in this competitor information. So still the market, it means that logistics market is dominated by unorganized players.
unorganized sector. Perfect. Because
they have-
maximum rural market is small players are there, which we call it unorganized. Though they are also big. You can see that Angadia. You can see this so many companies. Like example, we send I send lot of couriers from here Mumbai to Bangalore. Even professional courier, which is big compared to is a big, but it is an unorganized player. So you are right, one way.
And you mentioned the business model is different from others. So
I tell you why I feel
Right.
others, because this is the company which is providing you from first mile to last mile, including they give you technological services also. If I say typically Blue Dart Express, which I know I have worked there, I was working in their competitors' company for some times, where I know they only pick up your say courier, your packet from your house or your company from Mumbai, example. Then they put it to the airport where they're sorting facilities there, and they in the midnight they put it in the aircraft for movement from one city to another. Say you are sending to Delhi, so it will move to Delhi overnight. In the morning they will sort out at Delhi airport, and before 12 o'clock, 9 o'clock, whatever, they will send it to your Delhi office. So they are only giving you this much services, whereas these people are giving much more services to the customer, like e-commerce. They also collect money and they give it money to the e-commerce people. So this is something, and their scale is much larger than the Blue Dart. Look like.
So basically, they also do a bit like, what. So for example, if I order a shirt on Flipkart,
Yes.
so they will cater to Flipkart also as a delivery.
Yes.
What is it
Yes.
called? A delivery.
Yes, that is why they say the
partner or
e-commerce
something. Yeah,
market, they are
logistics partner,
almost
yeah, kuch to
logistics
bolna.
partner.
Yeah.
How far this is successful? because though they say this is a asset light model, but I personally feel that technological company to develop a technology or to buy a technology, lot of money is required actually.
So increase in fuel cost, etc., will not affect this kind of a business. Is it?
No, definitely logistics part, because part truckload and full truckload, definitely it will increases the cost. It will increases the margin. It will rather
Reduce the
because
margin.
reduce the margin.
And KMP salary increase, is it because of the ESOPs getting vested?
नहीं, ऐसा वो मुझे वो मिला नहीं.
Yeah, actual salary
Actually नहीं होगा. इतना सारा नहीं होगा, because no company will give you salary more than 100% increment or promotion in 1 year. But look like more on, because these people must have encashed their ESOPs.
Yeah.
So difference between the वो जो valuation होता है उसके हिसाब से उनका salary में वो add हो गया है शायद.
Correct.
But still यार 10 पैसे का अगर आपको 487 rupees मिलता है in 10 years time, so these people have made a good money. I would say this kind of concept, these people have put the concept and they were successful for their concept actually.
Correct.
So hats off these people who have created this kind of wealth by working 10 years, because till today I have worked in 3 startups and I know how it's difficult to work in startup actually.
Right.
Any more questions? मुझे लगता है सर, अगर मेरा पर्सनल I have not applied in this company, frankly speaking, because in past also we have done some IPO analysis of Paytm, PB Infotech and all these things, where we as a just unofficially, informally, I told I am not applying. I would say जिसने भी अप्लाई किया सबको एक तो fully मिल गया allotment, because retail is hardly 0.50 times subscribe हुआ है retail portion. Employees portion is hardly 0.37. So employees doesn't have any, they don't believe this company.
Yeah.
So most importantly, employee का तो कम से कम 2 time 3 time भरना चाहिए था, if they feel that this model is very good. But that's fine. So definitely this IPO listing would be at discount. Maybe what amount we don't know. And at that particular time, ये शायद 20-22 को listing होगा, तो वो time पे market भी कितना अच्छा है, that is very important. आजकल वो भी एक issue है ना कि market खराब है तो.
Yes sir. Sir. Hello sir.
Yes.
Same. I have the same doubt, sir. If he's that day
Just
listing.
put on your video, please,
1 second.
and introduce yourself, your name and qualification and background.
Yes sir. So my name is Anjanilu sir. I done MBA Finance. I'm working in State Street HCL Services as a portfolio accounting and insurance services agent, and I'm doing CFA level 1. I'm a beginner of trading, and I'm learning day by day. So I need your suggestions. I have the one doubt, sir. I'm watching the daily market. I'm also investing in IPOs and equities. So starter. So last 1.5 years, 2 years, I'm observing. I done CFA level 1, but I did not pass. I'm started. So I have the doubt, sir, that once IPO listing the day, the market is very low, definitely will affect the price, right?
Yeah.
So per day is 1,000 points is more than down, and the FIIs are going to huge sell. I lot of news are getting that. See, what are maybe you say like this long term is okay for this share, and I saw the so many positives, and also it will increasing of cases and COVID-19. If it suddenly will put the some of restriction lockdown, means it will affect of the delivery services in future. In 2020, 1,000 crores only profit. After it will go 2020 to 2,500 crores. It will vastly increasing of 1,500 crores. So definitely it will affect in future fuel prices and abroad deliveries due to the Ukraine and Russia war and all, increasing of crude oil. So many negatives is there. Inflation rate. increasing of RBI 40 paisa. So many negatives is there in market. See, once the listing day market is negative, so what will happen?
Definitely, this IPO will be listed at discount price. Definitely.
Okay, what about long term, sir? We will invest in long term.
Long term, let's see full annual report. Basically, this kind of company, when full annual report comes, what kind of information this company gives is very important.
Okay, sir. Okay, thank you, sir. Thank you.
And we
Thank
wait
you.
for the profit numbers. See,
Yes, sir. Yes, sir.
See, I tell you, I have experience. So, संतोष भाई एक और point बोलता हूँ. Blue Dart
great.
Blue Dart का एक सबसे बड़ा point क्या है मालूम है? Blue Dart has a very long term agreements with all foreign this airlines. So whatever material they brings foreign airlines, they give it to Blue Dart, and then Blue Dart give it to their destination. So Blue Dart had that good business of that particular kind of sector.
No, absolutely. Even DHL and DHL Express and all those multinational players,
Yes,
they have the bit of an unfair advantage of having contracts with the multinational companies. So that
Perfect.
is one of the things. So automotive sector, all these companies who predominantly use logistical services.
perfect.
So wo ek hai, but I don't know how these people will make
Sir,
it.
this 5,000 crores, where it will use, sir? See, for example, LIC IPO is going to government.
Sir, 4,000 तो ये existing shareholders लेके जाएंगे. Company will only get 1,200 crores, out of which they will either investing in new technology or new infrastructure, or they will buy a new company.
Okay, sir. Okay, sir. I understood, sir. Thank you.
Shall we move to?
Very good insights.
Yeah.
While Santosh is here, can we have the Nilanjan's presentation? We can come to the other IPO later.
Yeah, no problem.
Yeah, Nilanjan, you ready? Yeah, Nilanjan.
Yeah, Manoj. I'll share my screen, Manoj.
Yeah. We'll have a lots more on IPO. We'll do it later, including we'll have a short discussion on LIC also. Venus
Sure.
pipes and other things. Yeah.
Okay. So, so the topic that we're going to cover today are the year-end considerations, because the March 22 year has ended, and I would expect some action around preparations as well as closure of financial statements. So we thought that let's pick up the recent development that has happened and how it's going to change the perspective of both the preparers as well as the users of the financial statements when they look up the March 22 financial statements. To start with a disclaimer, the contents of the discussions are the independent views of the presenter and are purely for knowledge sharing purpose, and are not so these views are not necessarily the views of the platform, institute, or organization they're associated with. They're only for educational purpose, and please consult your advisors before you take any decisions on the subject matters. Okay, so I thought that before instead of starting directly with the amendments or the new requirements, I think it is appropriate to state what are the environment in which we are operating at present. So if you see the year that has gone by, that is March 22, there are very important developments that has happened, right? You would see the effect of COVID-19 unwinding. You would see the rising voices of various stakeholders on more and more insightful information about the company. There are also rising expectations on non-financial information, not only in India, but across the globe as well. Increased transparency. I think this will continue as and when we keep on growing as and when we are embracing various global initiatives or global platforms, the expectation of higher and higher transparency would continue to remain. With this background, there are also various regulatory changes that has happened, and we'll pick up some of them from a financial reporting perspective, but from an operations perspective as well. I don't think there is a single regulator which has not contributed to the new requirements which would apply for March 22 or even for a year beyond that. So for example, SEBI as well as RBI, uh, let alone the Ministry of Corporate Affairs, everybody has brought in plethora of requirements, right? Again, this is on the background of increased transparency, more and more data that they would need for their decision making purpose. Needless to say, the shareholder activism is is rising, and it continues to rise. Uh, Minority shareholders, especially, are trying to voice their opinions in a much more stronger and clear way. So that is also a factor which has pushed the regulator to prescribe certain new requirements in the overall corporate reporting. We spoke of of global footprints. More and more Indian entities are trying to adopt global practices. They're trying to have global acquisitions, and they're also trying to have a global exposure in their businesses. So that also kind of pushing the overall Indian reporting landscape. Unfortunately, the financial irregularities continue to make headlines, and today we will discuss some of them. But as a context, they continue to hog the limelight across the media channels. So, having set the context right, let's see how the regulators are reacting. Uh, Most importantly, the Ministry of Corporate Affairs have overhauled significant disclosure requirements from a financial reporting perspective. And those who were with us in our previous sessions as well, we would recall that not only the financial statement disclosures have been changed, but also there are new reporting requirements for the auditors as well. So what I would like to or like all of you to note, that even though they are from a preparer and an auditor's problem, what I would like to highlight is that ultimately these wide-ranging information would be available to various stakeholders, be it someone who are making an analysis of the financial statements, or various other stakeholders, for example, credit rating agencies or lenders, right? So I think this particular change is going to help them in making more objective and clear decision. So I felt all these new requirements are not only from a from a preparer or an auditor's angle, they're quite relevant even for other stakeholders, because ultimately these information would be used by them for their decision making purpose. So now if you would see what are the changes that has been proposed from an auditor's reporting perspective, or the scope of the auditor, which is primarily to audit and opine on the true and fair view of the financial statements, that remains unchanged, right? However, there are other reporting requirements that have been added in the auditor's reporting responsibility. So if you would look at from the auditor's report perspective, on the face of it, they would need to specifically comment on compliance with dividend norms. They would need to specifically comment on the funding transactions. So if I do a broad reconciliation, the at present, the reporting requirements which was there on the face of the audit report were 12. 5 more new reporting requirements have been added, and total there will be 17 new reporting requirements which will come in the audit report. Okay. So one thing to be noted is that one of them would apply from the next financial year, but the idea is that the regulator is pushing for more and more new reporting requirements. As far as the reporting on Caro is concerned, that has also been enhanced significantly. We started the year with 28 reporting requirements. Now we are we are more or less double the number of the reporting requirements which will come in Caro. So roughly we're talking about 50 reporting requirements which would come in the Caro report. But one thing which is commendable is that most of these reporting requirements will find a place in the financial statements as well. I could gather that there were growing voices from the profession that how come the auditors can make a particular comment when the financial statements don't include those disclosures. So I think the ministry has paid heed to those requests, and they had included those disclosures in the financial statements as well. Okay, so let's see what are the themes that are arising from these disclosures or the new reporting requirements. So from a financial statement and auditors reporting perspective, the theme or the areas where the disclosures will come is largely on account of financial irregularities, questionable transactions or relationships, loans and advances. That's a big area where the regulator has focused. There is also a focus on assessing or laying down criterias for assessing the financial health of the particular entity. Specific non-compliances, be it RBI or be it other laws and regulation, CSR, and there are certain other key items that has found a place in the financial statements. So net, if you would see, it is a very wide range of information, and it cuts across various themes which you would find in the financial statements. Okay, so now how the life changes, all right, let's say for the preparers or for the auditors. Due to these new requirements, obviously the efforts of both management as well as auditors will increase manifold, right? So in this context, it is very appropriate that both the preparer as well as the auditor engage early. In my experience, if you are engaging early, then you can agree to a mutual approach, and whatever are the implementation challenges, it has generally been seen that those implementation challenges are quickly resolved in a much more cohesive manner. Due to these disclosures, I would expect that there is an increased involvement of experts, be it income tax expert or be it an expert from a valuation field. All those would be more closely involved when the financial statements are prepared. Now, because of this new requirement, it is also expected that the company would set up new internal controls, or there would be a revision to the existing controls as well. So even from an auditor's angle, this would have a consequential implications when they are commenting on the internal financial controls of the entity. One area that I found could be challenging is that when the financial statements are being prepared, there is a requirement to present comparative information as well. So there could be a bit of a challenge which the company might encounter in extracting or updating their financial reporting framework to extract the information related to the comparative year. So again, an early engagement or early discussion with various stakeholders would help. Now, as far as the stakeholders are concerned, they would be provided with more and more granular information, and we'll see what are those information. Um, uh, all these would obviously help them to make a more objective and a clear-cut decision making. Uh, this is also expected to enhance transparency and improve the uh, overall disclosure framework of the entities as well. So what we'll cover today is we're obviously not covering the entire reporting requirements that have been placed. So we had chosen that we will pick up some themes, right, in the discussion today. So here, what we would be covering are the new reporting requirements which relate to financial irregularities or questionable relationships or transactions. So mind you, these are red flags, or these are some financial irregularities which have already happened in the year or in the previous year, but they had been meant to be disclosed in the financial statements as well as being commented by the auditor. So one such requirement is a comment and a disclosure regarding undisclosed income. So we all are aware of search and seizure procedures which the income tax department carries out. We're also aware of the undisclosed income which sometimes the company need disclose voluntarily or through various regulatory models with the income tax authorities. Now, as far as the disclosures in financial statements are concerned, the MCA has stated that if there is any transaction which has not been recorded in the books of accounts and that have been surrendered or disclosed as income during the year under the Income Tax Act, then the management should state whether the undisclosed income has been recorded in the books of account. So now, since there is already a reporting responsibility by the auditor would also comment on this particular aspect in its audit report. Now, a few aspects which I would like all of you to note is that this requirement has been written in the context of Income Tax Act. So if there is a transaction of income which was not recorded earlier in the financial statements, which has now been surrendered or disclosed as income under the Income Tax Act, these only would require disclosure in the financial statements. One important point that should be noted is that the company should have voluntarily admitted for such a disclosure. So a statement that has been made on the ground of coercion or force cannot be treated as surrendered or disclosed income. So ultimately, the intent of the regulator is to cover situations where the company has voluntarily opted to disclose an income which was not recorded previously in the financial statement. Uh, Now, since the requirement is also to state whether the previously undisclosed income has been recognized in the financial statement, one would expect a very detailed disclosure in the financial statement, which would enable the user to understand the impact of the financial statements. As far as the accounting is concerned, this would tantamount to a prior period error, and we already have accounting standards in place which deal with the accounting of prior period error. So if you would talk about an Ind AS compliant company, an Ind AS compliant company would need to follow Ind AS 8, um, as per which the previous year's comparative information would also need to be restated, and the adjustments would need to be done. As far as the companies who are following accounting standards, or IGAP as we loosely call them, the accounting standard 5 prescribes the accounting treatment for prior period error, and accordingly, the impact is recognized in the current year's financial statement. As a comparison with Ind AS versus AS, under the accounting standard framework, the previous year's comparative is not reinstated. So net in my experience, though I have seen these situations of undisclosed income to be rare, but what I could gather from my from reading of various press articles or discussion with other professional colleagues is that what was brought to the attention of the regulator are that in case of undisclosed income, uh, the some of the companies used to recognize the tax implications in the financial statements. However, the corresponding income and the corresponding asset was never brought into the financial statements. So that's the reason you would see there is a specific mention in the financial statements as well as in the auditor's report that whether the previously unrecorded income was recognized in the financial statements or not, right? So though I could not fathom how come the view that I will take only an impact of taxation but not bring in the unrecorded income, but that's what the ministry has observed in certain cases. Okay, so a couple of thoughts which I want to bring it out. Let's say if the company is voluntarily disclosing its income under various amnesty scheme. For example, we had the Vivad Se Vishwas scheme, whether all those would require disclosure. To my understanding, since we're talking about surrender of income, a voluntary surrender of income would also tantamount to a disclosure as well as reporting by the auditors. What about transfer pricing adjustments? So normally, what we can see is that when the transfer pricing assessment uh, is ongoing, the assessing officer would have its views on the transfer pricing margin. So let's say if I use a margin of 10, the assessing officer said no, the margin should be 15. So now the question is whether this 5% difference would also tantamount to surrendered income. I don't think it would be a surrendered income in that case because it is ultimately a judgment and an interpretation of what are the comparable margins that are being earned. So here it is not a case where I have not disclosed my income previously, but it is only a matter of judgment based on facts and circumstances. Uh, what if the additions made by the income tax authorities are disputed by the company, right? So in that case, I think the requirement is pretty clear. It has to be voluntary. If it is being disputed by the company, this will not fall within the ambit of disclosure or in the auditor's reporting responsibilities. Uh, One aspect which I want to highlight is that if there is a situation that you guys encounter for undisclosed income, this definitely raises significant doubt on the internal controls of the entity. Uh, let's say the company has disclosed voluntarily that over the past 5 years, the cash that has been generated on account of scrap sales were not accounted for, right? And let's assume that the number is material, then I would, include those unrecorded income in my financial statements. What I would like you to caution and also note that the very fact that the previously unrecorded income is being identified and being recognized today would raise significant doubt on the internal controls of the entity. They somehow state or they somehow indicate that the internal controls were weak. As far as the requirements of the ICAI is concerned on on the internal controls, they have stated that if you are restating the previously issued financial statements, then it would amount to a to a material weakness. So just to give you a recap, if you are accounting the previously unrecorded income for an Ind AS compliant company, you would be restating your comparative information. So in that case, this is a very clear indication that the financial statements of the previous years were incorrect, and hence there is an existence of a material uncertainty, or sorry, of a material weakness of internal control. So please take a note when you are assessing these cases of undisclosed income. Now, as far as the entities which are not following Ind AS but following accounting standard, as we discussed, the impact of the prior period error is recognized in the current year's financial statements. So my reading of the guidance as well as the requirement is that even though the impact is recognized in the current year, but and the comparative informations are unchanged, this does not take away the fact that the financial controls of the entities are weak. So when you are assessing the implications or framing the audit opinion from an IFC perspective, internal controls over financial reporting, or the management when they are giving a comment on the operating effectiveness of internal control, they should take into account these aspects as well. Okay. So next disclosure that has been proposed, that has been included in the financial statements are with regard to Benami properties. So if you could guess, the word Benami would mean that the person who is holding the property is not the ultimate owner, right? What a Benami property would normally mean is that it means a property which is being transferred or held by a person, and the consideration or the value is paid by somebody else. Okay, so I am only acting as a face, as a legal owner, but ultimately I am holding this in substance of somebody else. What I would like to also highlight that the Benami properties are also dealt with the Prohibition of Benami Property Transaction Act 1988, and there is a proper framework on how to initiate proceedings under the Benami Properties Act. So in a nutshell, if you identify instances where the company is facing a proceeding under the Benami Property Act, the company is required to disclose certain information in the financial statements, and correspondingly there is an auditor's reporting that has also been prescribed. As you could see from the reporting requirement itself, this disclosure or the reporting requirement arises when the proceedings have been initiated against the company. So in a situation where there is only a show cause and the proceedings are not yet been instituted, so then those would not fall under the disclosures here. But as and when there is a proceeding, it would require a disclosure as well as a comment by the auditor. Now let's see what are those disclosures that are required to be made in the financial statements. So a number of disclosures that has been prescribed, but the key disclosures are there on this slide, which includes details of beneficiary. So the entity would be expected to disclose the name, address, government identification number, for example, PAN, and relationship with the company. Details of the proceedings are required to be disclosed. The initiating officer, date of show cause notice, name and nature of the property, the status of proceedings and the company's view, whether the proceedings involve attachment, adjudication, or confiscation. So here, if you could observe that the information is required in a very clear-cut manner, and most importantly, the status of the proceeding and what are those implications are required to be very categorically disclosed. As far as the auditor is concerned, the auditor is expected to review the board meetings, the board minutes, the secretarial records, as well as perform a review of legal expenses to identify whether there are any uh, pending proceedings for Benami property. The auditor would also need to consider the implications of laws and regulations uh, on the financial statements as well. So as a personal experience, I have not encountered any situation where the company is holding a Benami property. But what I could again gather is that MCA had observed cases where the properties are held on the behest of someone, or there are ongoing proceedings, and accordingly, the MCA had found it to be appropriate to include a specific disclosure. Okay. The next important disclosure that has been inserted is on account of willful defaulter. So if you would recall, the term willful defaulter and its overall framework is or has already been prescribed by the RBI. So under the RBI norms, a willful defaulter would mean a person or an issuer who is categorized as a willful defaulter by any bank or financial institution or a consortium thereof in accordance with the RBI guidelines. What I would like all of you to note is that disclosure is required where the company has been disclosed as a willful defaulter by any bank or any lender during the financial year or after the financial year, but uh, but but before the financial statements are approved. So what I would like to specifically note that the disclosure is required by any bank, which would imply that even though I don't have any direct borrowing facility, but I have other transactions, for example, guarantee, or I have a off-balance sheet derivative transaction, even those banks are declaring the entity as a willful defaulter, it will tantamount to a disclosure here in the financial statements, right? So it is not necessary that you should have a borrowing facility, but if you have any other type of facilities, those would also be covered within the scope of the disclosure. Another thing is that the requirement is not only to disclose the status as of balance sheet date, but if the entity has been disclosed has a willful defaulter even after the reporting period, but but before the financial statements are approved by the board, those disclosures will still be required in the financial statements. Uh, so if you would see the reporting requirements, it says that it has to be declared as a willful defaulter by a bank or any other lender. So in this regard, there is a guidance that when there is a government or a government authority has declared you as a willful defaulter, that would also tantamount to a disclosure in the financial statements. Um, so what is also important to note is that from an auditor's perspective, they should obtain confirmation from banks and financial institutions to state that whether they have been declared as a willful defaulter or not. Another way which the auditor can check is to go to the websites of various agencies, for example, CIBIL or RBI. They host information of entities who are declared as a willful defaulter. If you would go to their website, they normally categorize it into two categories, where the exposure is less than 25 lakhs and where the exposure is more than 25 lakhs. So from an auditor's reporting perspective or from a management side as well, it is very appropriate that they visit the website and corroborate that information prior to disclosing them in the financial statements. Few implementation challenges which I have a raised hand from Archana. Archana, you want to speak something
Yeah, just on the previous slide,
on the willful defaulter?
yeah, on willful defaulter,
Yeah.
it says this third last point, consider the disclosure is made where any bank has declared the company as a willful defaulter, even if such bank has not lent to the company.
Yeah.
So how will the company, if the bank is not lent, then why will they declare the company as a willful defaulter?
Yeah. So, Archana, what happens is that it is not necessary that every banking transaction will lead to a lending or a borrowing facility. Let's say if I have a transaction of guarantee, right? Or let's say there are certain derivative transactions or a derivative agreement that have been entered into, right? So even if with those banks where I have no borrowing facilities, but I have other relationships, and those banks are declaring me as a willful defaulter, then the disclosure would still come. So what I would like to state is that it is not that only those banks from which you have a borrowing facility or a borrowing relationship that will categorize you as a willful defaulter as per the RBI norms. Even if there are other relationships which are existing, they can also categorize you as a willful defaulter. Yeah.
Yeah, it's clear.
Okay, thank you. Okay, few implementation challenges which I thought would be important for our consideration. What if the company has just received a show cause notice and they are yet to be disclosed or categorized as willful defaulter? Uh, in that case, my suggestion to you would be is to make a factual statement in Caro to state that the company has received a show cause notice and they have either responded or they are in the process of responding it. There could also be situations where the willful defaulter uh, status has been declared after the year end, but before the auditor's report. Here also, my suggestion would be from an auditor's side, the auditor should make those disclosures in the auditor's report, right? Because ultimately, if there's information which is available to you prior to signing off the auditor's report, it is in the auditor's responsibility that they deal with it appropriately. Okay. Another important disclosure which the ministry is suggesting is about relationship with struck off companies. Now, to give you a background, under the Companies Act 2013, there are certain situations where the registrar of companies can strike off the name of companies from the register of companies which is maintained under the Companies Act. So those situations could be, for example, the company has incorporated, but it is not doing its business, let's say for the past 1 year, or it has been a period of time, let's say 2 years, when the company has stopped doing business, but they have not changed its status to a dormant company. And there are other um criteria which the Companies Act has laid out to identify which all companies would qualify as a struck off company. Now, what MCA noted is that there are transactions which a normal operating entity is doing with these struck off companies. These obviously would raise doubt because these companies are not valid companies in a particular in that sense. They can't operate as companies because they have been struck off by the respective registrars. So in that context, the ministry has explicitly included a disclosure requirement to state what are the name of those struck-off companies, what are the nature of transactions that has been have been done with, what is the balance outstanding, and what is the relationship with the struck-off company. So again, a very detailed and a comprehensive disclosure which the ministry is asking the companies to make. Uh, so what I would like to also highlight is that to identify the list of struck-off companies, there is a particular form STK 7, which the individual registrar of companies is supposed to collate. Now, if you would go to the MCA's website today, you would find the list of the struck-off companies hosted by various registrars on the website. So, one of the challenge which I could foresee in this regard is that the point in time when this data is made available to public is not uh, coinciding with the date of the financial statements. For example, if I am following a March 22 year end, the data could be made available, let's say, on 15th of February. Okay, so then again creates a challenge on testing whether there are new entities which have been identified as struck-off companies but not had been made publicly aware. There are certain administrative challenges as well. If you would download those particular information from the MCA website, they are either in scanned copy or they are in PDF. So to have a search or to compare the information that I have with the information in the MCA website, that is a big challenge, because ultimately I have to convert the MCA information in a searchable form and then do a search between the information which I have and the information which is there in the MCA website. Another challenge is that what is the search criteria that should be used? Normally, when you are setting up the master of let's say the vendor or the customer, you don't incorporate the company identification number in your vendor master. Normally, you would incorporate the PIN, the PAN, the Aadhaar, TDS details, and so on and so forth. But here, for you to have a search, you would need to either have the company identification number, or you would need to do a search based on the names of the companies. So again, that's a challenge uh, from the company side as well, to have a completeness on the information. Uh, the reporting requirements or the disclosure in the financial statement is not limited to purchase or sale of goods, but it cover any transactions, right? So let's say if you have invested um, in a company which is struck off and you have a balance outstanding as of the balance sheet date, that would require disclosure. If you have let's say given an advance to the struck off companies, those will require disclosure in the financial statements. Most importantly, if there is a shareholder who is a struck off company and who is holding shares in the particular company, that would also require a disclosure. So in a nutshell, the ministry is not restricting the disclosure to the normal purchase of goods or sale of services. They are trying to cover any transaction which the company is entering into with a stock of company. Okay. As far as the disclosure of amount is concerned, the ministry requires to disclose what is the amount outstanding as of the balance sheet date. There were questions whether this amount should be disclosed gross of impairment loss or provision for doubtful debts. The ICI has very clearly clarified that these numbers should be gross amount, and the provision for doubtful debts or impairment loss allowance should not be adjusted. Uh, one important thing is that if there is a relationship with stock of companies that has been identified, it is also important for the management as well as the auditor to assess whether it is a related party or not. There could be a situation where a stock of company is identified as a related party. In that case, the auditor would need to assess the implications of non-compliances with other laws and regulation as well. Okay, again, few implementation challenges which I felt was important is that let's say there was a stock of company with whom I had transactions, but there is no outstanding balance as of the year end. So in this case, the guidance is pretty clear. Even if there is a transaction during the year, it would attract disclosure. If the balance is outstanding, then it is required to be stated as nil. But we can't take a position that there is no balance, and hence the disclosure is not required. What if the name of this stock of company has been restored by the NCLT or any other adjudicating authority prior to the approval of the financial statements? In that case, the disclosure is not required. The disclosure is required for those entities which are stock of companies as of a particular date, and not for those companies which name has been restored. Well, there could also be a transaction between two stock of companies. Let's say stock of company 1 and stock of company 2 uh, buys and sells shares of company X. Will this require a disclosure? As far as the transaction between these two stock of companies are concerned, since the company is not involved, no disclosure is required in this particular aspect. However, since one of these stock of company would continue to hold shares in company X, the requirement to disclose who are my shareholders and who are and whether they are stock of companies or not, that would be triggered, and hence the stock of company name would appear. Okay, whistleblowing complaints. I think due to the rising shareholder activism, you would encounter a large number of whistleblowing complaints. Recent whistleblowing complaints which are making headlines are the whistleblowing made in Canara housing finance case, and we'll also touch upon that in a moment. But what I would like to bring to your attention is that more and more whistleblowing cases are brought to light, and those whistleblowers could be employees, could be other stakeholders uh, uh, like proxy advisors, or even shareholders of those particular entity. So in this particular situation, the company is required. The company is not required to make any disclosure in the financial statements. However, the auditor is required to consider the whistleblowing complaints when they are forming the audit opinion. So auditor is required to consider the complaint received to decide the nature, timing, and extent of audit procedure. Auditor should also evaluate whether whistleblowing complaints are investigated and resolved by the company in a timely manner. Um, the Companies Act 2013 or the SEBI regulation requires the entities to establish a whistleblowing mechanism. So needless to say, when the auditor is assessing the whistleblowing complaint, they would also look at whether the whistleblowing mechanism is correct or not. There is no materiality threshold that has been prescribed. So when the auditor is obtaining the list of whistleblowing complaints, they are supposed to obtain all whistleblowing complaints. right? And based on this particular list, it has to assess the implications. So there is a threshold on materiality which the auditor can apply when they are assessing the implications. But when they're obtaining the list of whistleblowing complaints, they are supposed to obtain the list of all whistleblowing complaints. One important clarification is that the auditor is not required to consider whistleblowing complaints which pertains to previous year. So as long as the whistleblowing complaints have been received in the current year, those are supposed to be considered by the auditor. Now, I could think of 2 or 3 particular scenarios, and that could happen over a period of time. Let's say the whistleblowing complaint were received during the year. That is the scenario number 1. Scenario number 2 could be that the whistleblowing complaint has been received during the year and they have been dealt with. Scenario 3, they are in the process of investigation. I think as long as scenario 1, 2, and 3 are concerned, it is quite uh, uh, s- uh, it is quite important that these should be reported by the auditor in the audit report. As far as the situation 4 is concerned, where let's say the whistleblowing complaint is received after the year end, but before the audit report date, my suggestion to you would be that you include them in the Caro reporting as well, because it can't be a situation where an information is available and they have not been dealt with properly by the auditor. Since there is a specific reporting requirement, my suggestion to you would be that even though the whistleblowing complaints are received after the year end, but they are before the date of the audited report, the auditor should make a factual statement when they are commenting on this particular clause. Okay. So on fraud reporting, this is not a new clause, but an existing clause in the auditor's reporting responsibility. What I would like all of you to note that the reporting responsibilities of the auditor has been enhanced here as well. So earlier, the reporting responsibility on fraud was limited to fraud committed by officers or employees. So now if you would see, the reporting responsibility would cover any fraud on the company or by the company. So in that sense, the reporting scope of the auditor has increased significantly. As far as the financial statements are concerned, since the auditors are commenting on financial statement, the auditor is concerned with the frauds which are related to the financial statements. Auditor should also consider the reporting responsibilities or the reporting implications on other clauses. For example, we spoke of whistleblowing. We also spoke of undisclosed income. So if there are certain observations in these 2 clauses as well, the auditor should consider when they are reporting on this particular aspect. Okay, I think there is a very common situation which some of us would have encountered, is that how would you report when the investigation of the fraud is in progress? Do I say that there is no fraud that has been reported, or do I say that I don't know what is the implication because the investigation is in progress? Here my suggestion to you would be is to assess the outcome of the investigation to the extent it is available to you. Normally, when there is a fraud investigation, you would involve a forensic specialist. And since the investigation is in progress, it is important that the auditor and the forensic specialist discuss and at least see which way the investigation is going. If based on discussions and based on other evidences, the auditor believes that there is a likelihood of a material misstatement, then it should be considered by the auditor while reporting under this clause.
This is investigation by whom? Which
So-
agency? It could be police department, it could be MCA, it could be NFRA, it could be Serious Fraud Office, or it could be any, police inspector also at which possibly so a complaint is filed.
Right, right. So Manoj, normally when there is a fraud, the first step is that the entity would engage on itself a forensic specialist, right? So it is not that every time the police or SFIO and everybody would be involved. They might insist on initiating a fraud investigation, right? So if there is a fraud, then all these specialists are involved. The expectation from the auditor is to liaise with these specialists and obtain a brief idea that what which way the investigation is heading. Is it that there is active development? Is it there are some recent red flags which those investigating agencies have been highlighted, or um, or there is no development at all? So basis that, the auditor would need to form a view and then comment on this clause uh, accordingly. To
So
answer your
auditor forms a view of about if it is a fraud or not.
No, so auditor from its reporting responsibility is not supposed to conclude whether there is a fraud or not. Okay, the responsibility would lie with the management based on the investigating agencies that has been involved. Auditor would only need to comment that if there is a fraud, yes, these are the implications. Auditor by their scope are not investigators in that sense, and they are not supposed to identify or conclude on instances of fraud. Okay, they are
So
only required to
where
report.
the management itself is involved in fraud,
Yeah,
or the promoter linked entity
yeah,
is involved in fraud, then what happens? The management will not do it. Even the auditor may not be aware or informed by the management. Only there would be no recovery of those advances. Of course, now regulations are tightening, but that loans and advances are there. It has been a very gray area.
So
So
Manoj,
those recoveries are not there. Then what happens?
yeah. So Manoj,
Actually, it's a fraud. Money doesn't come in for 1 year, 2 years,
yeah. So Manoj, just to add to what Nilanjan was, responding. Basically, this clause is confined to the frauds under section 143, subsection 12, right, Nilanjan? So this is
yeah,
not something which is all pervasive as such. So there is a guidance note that the institute has also, when 143 subsection 12 was notified and it was, quite fresh. During those days, the institute had come up with a guidance note as to what the auditor is supposed to do. So this is basically to bring in the Caro report. In fact, this is a very good clause, which now requires the auditor to state that whether any reporting under 143.12, there are certain forms and, there are time limits and, there are certain thresholds. This is for more than 1 crore. So the issue was basically how does the stakeholder, how does the shareholder come to know whether any frauds have been reported? So one thing is, as Nilanjan said, investigation stage is one thing. That something is being investigated. Of course, that will be brought out elsewhere in the report, because maybe in the main report itself it will. So, जैसे आप बोल रहे हो management fraud, etc., that will be something which will be dealt with by the auditor as a more serious matter. Here, basically, if there are any filings under 143.12, that will have to be reported in Caro now under this clause. So now you have a kind of a single source of information to evaluate. Otherwise, it would have not known, right? So if there is a form which has been filed by the company, as a shareholder, you don't track, you may not be able to track the company on day-to-day basis, right? So this Caro may, in one single glance, you'll come to know that there has been this reporting in case of this company, and then you can take your, appropriate actions.
Now, what happens in quite a few cases, there are a lot of bank loans. Bank has a monitoring mechanism, right? Internal, credit monitoring mechanism. And based on that, the bank declares the account as fraud. One of the banks. Usually a company may have, anywhere between 5 banks, 10 banks, 20, 30. There are even some cases 60 banks involved. So one bank reports as a fraud. And then it shares in its quarterly report or in a media release, they have reported this account as a fraud. They have done a good job. For example, this could be RHFL. It has happened in particular case. Indian Bank reported it as a fraud. There are 10 banks. Now the quarterly report of the company will come. It doesn't it doesn't mention about the fraud. Annual report come, it doesn't mention about a report of fraud. Then another bank reports the account as a fraud. Then another third bank reports as a account as a fraud, but the quarterly report of the company doesn't report as a fraud. Now then, what is the role of the auditor? Today there are 9 banks as of today which have reported account as a fraud.
So
But
Manoj,
then what actually happens? Maybe I think we are doing a real life example of the latest report. But can the auditors remain in denial throughout? When the amount, it doesn't go to IBC, because IBC today for NBFCs, the RBI has to authorize, right? Until then it doesn't go to IBC. They have to appoint an administrator, which has happened in only, I think, so far about only 2 or 3 cases, right? DHFL, Chiri and Reliance Capital by supervision.
Yeah.
So here account, there are 9, and there is also some writ petition regarding fraud. Writ petition is there, but in the courts a matter is pending. Then really what's happening, I think and there are quite a few other cases in this evolving stage of financial reporting where I think more light can be
So Manoj
given.
ji, see now this clause, there are 2 things. एक तो ये clause में they are primarily talking about frauds on the company. I think what you're talking about is fraud by the company on a bank by defaulting or by misfeasance or by diversion, etc.
So what we referred about is a reporting by a bank of the fraud.
Reporting by a bank. Okay.
That's all. Just we come to know through a press release. Indian Bank has reported this as a fraud case.
So, sir,
and then what the bank do? Possibly the bank auditor has told the bank. It's possible the bank auditor tells the bank, you make a provision. And then it gets reported. So maybe the bank auditor is doing a fairly good job, trying to protect interest of the stakeholders of the bank. So and there's reputation also. You got it? It's possible the bank auditor has pointed out this. And here, like in 2 cases today, there are 9 banks which are reported. And then there is some writ petition and one doesn't come to know, except from an intelligent person who does a deep dive in the quarterly reports or the annual reports. Then you really come to know the sense of it.
So if I can respond, Manoj, as far as the responsibility of auditors are concerned, right? I don't think it gets triggered only when you have a specific reporting responsibility, right? Let's say if I'm auditing an entity, there is a fraud, management doesn't tell me, but I get to know from other public sources, right? Let's say you mentioned press media. Now even there are news on Twitter or on other social media platforms. As an auditor, I cannot deny that these are not evidences. These are evidences which have come to my attention. Okay. Now it is for me to decide how do I want to report them in my auditor's report. As far as the quarterly reporting is concerned, there is no quarterly Caro, right? Because I am not doing this this audit under the Companies Act. I am doing it as per the SEBI requirements, right? SEBI doesn't require me to give a Caro in every quarter. But that still doesn't mean that the auditor is not required to assess the implications, right? So if there is a fraud of the sensitivity and the nature that you are mentioning, I would expect the auditor of the borrower to have an implication in the audit report. Now, that implication could be a qualified report, it could be an adverse report, or it could be a disclaimer of report as well. But to answer your point, as an auditor, I would need to gather evidence not only from the company, but also from other independent sources, and then draw up a conclusion. Yeah.
That's quite interesting. So that means a auditor has a clear responsibility,
Yes. Yes.
and even
Yes.
the KMP of the company, the CFO, also has a responsibility.
Yep. Yep.
Quite here, he may not be aware, huh?
Yep.
But or he might have just come in every sometimes CFO change. There is history. He may not be aware, but
Right.
then it's a clear responsibility of due diligence should be done by the
Yeah.
auditor or the KMP or the employees of the company also, right?
Yeah. Because ultimately they are the office bearers of the particular entity. Under the regulatory framework, they have been given certain roles and responsibilities, and the most important role is to preserve and maintain or safeguard the assets of the particular entity. So if I am failing in that basic responsibility itself, then I would say it's a huge doubt on the integrity and the overall governance of the entity. Yeah.
Interesting. We'll have a live annual report review. I think that will throw good light. Yeah.
Yeah. So as far as the theme on financial irregularities and the new reporting responsibilities were concerned, this is what I had wanted to cover. I am open to any questions or any clarifications or any point of view, and then we can take it forward from there.
Dushyant, some thoughts from you?
Hello.
Yeah, can you put on your video?
Yeah. See, basically, all these requirements are, I would say in general that they are quite comprehensive and quite a challenge for the auditor, I would say.
So Dushyant, I think the responsibility is twofold. It is not only the auditor, but even for the management, right?
Management responsibility is always there. Management responsibility is always there. But as a outside agency, like an auditor with a limited, time and resource, it is a big challenge.
That I agree.
And when too many, all these things are to be, checked, and still whether the purpose as intended by MCA will be served is also a question, because a lot of things may not be immediately, available to the auditor, and there may be a proper scheme. If somebody wants to defraud or somebody wants to, have a way out, he would have layered the transactions and all, and difficult. And earlier we talked about the Benami properties. See, Benami, why somebody will buy in the name of the company? On the contrary, the company management or directors will buy in somebody else's name. So that purpose of this Benami for the company, I was just wondering what purpose it could serve. You said that there were some instances which MCA came across. I must be there. But by and large, if you see the people's intent, when they want to hide or defraud, then they normally do in the family members, friends, and some such relatives and some such name. Never they do in the company's name.
So I think,
Yeah.
Dushyant, to answer your questions step by step, I do agree that from an auditor's perspective, considering the fact that he may not have access to the entire chain of information, right? Because all this transaction could be layered up, right, through various entities, and this could happen through a long period of time, right? So there is obviously a limitation from an auditor's perspective. But having said that, since I have a responsibility to report, the defense which the auditor should have is a very robust and a very clear cut audit procedures, right? It can't be that I am relying only on management representations, right? I would have to perform questions. I have to perform procedures. I have to ask tough questions, right? uh, whether I get those answers or not is what would determine the ultimate outcome. But I can't put up my hand to say that I am not able to perform, right? Ultimately, I have a responsibility which has been vested to me by the shareholders, and I have to perform that. Yes, I do understand that, and that there is a challenge, right? And this challenge can be mitigated by way of robust documentation. I put down those steps very, very clearly, that this is what I have done. This is what external evidences which I have looked at. I have corroborated with multiple sources, right? This will only help us or help the auditor to build up a stronger case if things go south.
Right.
But I don't think in today's world, when everybody is screaming for more and more insightful information, I would be able to stand up to that and meet those expectations, right? Uh, you
Yeah,
also,
and
yeah,
Nilanjan,
please,
in
yeah,
talking about in terms of now the time required to get all this information and then report,
yeah.
how much more time it will take? Any idea?
For
See, generally, the listed companies have to come out with the audited results. I think is the time limit is, I think, 90 days,
60 days,
60 days. Okay, and quarterly is 30 days.
45,
Quarterly is 45, and annually is 60 days.
yeah.
Now, within 60 days, the auditors to complete in this Caro report for the number of companies which he might be doing it. So time-wise, how it will be working like? Because, he will definitely need to spend much more. As you said, there are something like 28, 29 new requirements have been added.
So I would like to highlight two things, Dushyant. This Caro reporting is a requirement under the Companies Act. Okay. The quarterly reporting that we do is not a requirement under the Companies Act. That is a requirement under the SEBI listing regulations.
I understand. I'm talking about the annual one.
So when you're talking about the annual, the 60 days or the 45 days is what the SEBI requires. Okay. So what typically happens is that within 45 days or 60 days, you present your annual financial results, not the financial statements, right? So if you would have looked at the quarterly results, you would have a particular format which the SEBI requires the entities to submit. That doesn't require you to have the financial statements audited on that particular day. Okay. So theoretically speaking, I can submit my financial results, let's say on 45th day or 45th day or 60th day. I could complete my audit report on financial statements at a later date, theoretically speaking. Okay. But normally this does not happen. Normally the financial results under SEBI as well as the financial statements under the Companies Act are signed off under the same time. Now to answer your question, how do I balance these two requirements, right? Because I anyway have 60 days to complete my entire audit. So in that case, what generally happens is that as far as the new reporting is concerned, the auditors engages with the company from day one, right? So what I had actually experienced that when this new Caro requirement has come, right from quarter one, the auditors and companies have started engaging with each other. right? Because unless I do that, I will not be able to know what are the implementation challenges. So for example, companies like TCS or Infosys, who publish their audited financial statements by 15th or by 20th of April, if they would start this discussion on 31st of March, they would not be able to close this report at all. So the idea, I think I also mentioned somewhere in the slide, is that you engage early. The earlier you engage, you get to know of the problem, and you have sufficient time to deal with those problems.
Engagement is a continuous process throughout the year effectively, right?
Yeah.
Acha, can we have the real life examples? I think there are quite a few
Sure.
real life examples we are discussing.
Sure.
Thanks, Nilanjan.
No problem.
Unmute you.
So first, Manoj, I thought since this particular entity was in
અમારે એ બોલવાની છૂટ નથી હોતી, અમારે સાંભળવાનું છે.
okay. So
What
I
is
thought
the
that
date of the report?
so the date of the report is 6th of May.
Oh, wonderful. So this is the latest real life example.
Yeah. So
Good.
this is
Let's do
for
a deep dive.
Reliance Home Finance, and this is for the financial results for March 22. Right.
Home
So,
finance is a very good, safe business.
Yeah.
Among the best business, Deepak Parekh has said one of the best businesses. And current environment is really very, very good. He has not seen this superb environment since last 40 years of his career.
Right.
Who are the auditors?
So the auditor for this is Tambi and Japurkar.
Okay.
They are a Mumbai-based firm.
Achha, they are based in Mumbai.
And they have couple of other branches as well. I could see from their letterhead. They have in Pune, Washim, Amravati, Raipur. So mostly in the
Achha, it's a very big regional firm.
Yeah. So mostly spread in the western side.
Okay.
Yeah. So the auditors have given a clean opinion for Reliance Home Finance.
Clean opinion. Okay, very good. Of course, the promoters are in the top richest family in the world, among the two richest family.
Yeah. So they have given a clean opinion. They have not identified any observation or adverse remark. However, they have some matters which they wanted to highlight. So in a nutshell, what they have tried to say is that the company is going through a resolution mechanism, wherein there is a resolution plan that are being discussed. So a couple of the creditors have agreed to the resolution plan, and they are actively trying to continue the company as a going concern basis. So the idea of this particular paragraph is to highlight the practical situation that the company is in, and they believe that these instances would be resolved and the company would be able to continue as a going concern basis.
Oh, very good. The industry has promising prospects and this resolution and all that. Many companies, practically over 80% of the companies in the world had the COVID issues, special dispensation. So that means the company has a good future.
Yeah.
Being in a good industry they are in. Okay.
But what I would like to caution here is that since there is a media news on the overall resolution framework, because one of the important criteria is that the creator should have agreed to the resolution plan. So what I could gather from various media sources is that or a group of creators are yet to approve the resolution plan, which as a result of which the going concern or the future prospects of the company could get delayed a bit.
Yeah, few creditors maybe have approved, but as per reports which came in Economic Times,
Yeah.
some of the major creditors, the credit fund of SBI, the fund manager, the Lokesh his thing came in report. They had lent over 700 crores of retired senior citizens,
Right.
fixed income, but they have rejected this resolution plan because
Yeah.
the resolution plan is not valid. It is not under IBC.
Correct.
They are not a party to the resolution plan.
Correct. Correct.
Even HDFC Bank has refused to be part of this process. They are a lenders, but they are refused to be part of this so-called resolution process initiated by one of the bankers.
Correct. Correct. So if I would go to the number, and obviously there are issues on the show cause notice which SEBI has issued, right, which is restraining them from accessing accessing the capital market. That has also been highlighted.
Achha, that has been mentioned.
Yeah.
So these auditors have done a really great job in that respect.
Yeah.
They have mentioned about SEBI show cause notice. Achha, debarring promoters from capital market.
Yeah.
So have they mentioned it as interim thing, because final is yet to come?
So they have mentioned that this is the SEBI's interim order.
The SEBI report was discussed in a deep dive earlier. They had shown a diamond structure in their order, over 90-page order, a diamond structure, the mesh of that shell companies and the type of corporate structuring they do. Some of the finest brains are involved in such corporate structuring.
Yeah.
So SEBI final order is still pending. SEBI has also opposed this so-called resolution plan.
Yeah. Okay. So if I come to the numbers, I think that's where it is.
Sir, 1 minute, sir. Sir, I have the one.
Yeah.
Sir, you said
Put on your
fraud
video and
of-
identify yourself. Mention
Sir,
your name, qualification, and background, please.
Yeah. Sir, my name is Anjanil, sir. I am doing CFL level and I done a MBA
Put on
finance.
your
doing-
video.
Yeah. Sir, actually, you say at the end, I following that.
Can you put on a video? Have you put on a video?
No, sir. No, sir. Our background is
Just
bad.
put on your video.
1 second.
Yeah, it is good for all to understand the proper perspective. Yeah.
Yes, sir. Last time I done an investigation of the Carby case study. The transaction I had made, that is a caught by the forensic audit. 600 crores stocks is mortgaged without knowing of stakeholders. The company done the fraud. It will related fraud transaction or any this related presentation.
No, we're talking about Reliance Housing Finance, right? We're not talking about Carby.
Yeah, so we'll come to that. Incidentally, Carby is the registrar for Reliance Home Finance. Just for your information.
Yeah.
Yes, sir.
So this is among the connection. Yeah. Yeah, carry on.
2,000 crores is 2,000 crores is customers stocks is mortgaged some bank and took the 600 crores. That is fraud transaction without SEBI under control. Then they got in forensic audit tomorrow next day. The Carby is not able to transaction to the Sensex and Nifty. So like that fraud is happened. I investigated on that.
Yeah, very good point raised. In fact, Carby was involved in a transaction with SBI, and there was some relationship. And of course, this is indirectly public money.
Yeah.
But good point you have raised.
Yeah.
Anjanelu, good point you have raised. Yeah. Then let's discuss the company. Then we'll come back. Yeah.
So Manoj, from a income perspective, if I look at year ended March 22, it is 290 crores versus 803 crores of last year. So a significant reduction here. If we can see from a net profit perspective, net profit or net loss perspective, it has jumped 5 times 1,500 crores to around 5,400 crores. The net-
5,400 crores. What is
Yeah.
that?
So that's the amount of loss, net loss that they have reported.
5,400. It is thousands or rupees, or it
No,
is
it's in
crores?
crores. It's in crores.
How can it be possible?
It says
Even the
crores.
largest NBFC in India doesn't have that type of numbers.
So at least that's what I
What
can
is the
see.
income?
It
I
says
think, is it some typo error? 276 income and you mentioned 5,439 and 8199. What is 8199?
that is the total expense.
8199.
Yeah.
So is it 8,199 crores?
Yes.
Company has got so much money to spend.
No,
Or
I
they are
think
on a big expansion drive.
no, I think Manoj here they have recognized a significant impairment charge on financial instruments. So if you would see, sorry.
Impairment charges.
So they have recognized a loss of around 6,000 crores, 6,700 crores.
Okay, so is any company can do such write-offs of loans?
So they can, but it again raises questions that if you have given money to someone and then you're writing it off, right? Then you are actually saying that those money has gone to somebody else. So it is shareholders' money which has gone to somebody else. So it again creates doubts whether there is a inbuilt diversion of fund, or is this any other questionable aspect that should be looked at.
So for this recovery proceedings and processes are essentials, right? And
Yeah.
reporting. Company has to initiate recovery through the police,
Yeah.
right? Often police is helping a lot
Yeah.
in recoveries or through agents
Correct.
or through Sarefasi
Yeah.
or debt recovery tribunals, right?
Yeah. Yeah.
High Court, Supreme Court, talking with the borrowers, enforcing securities.
Right.
So these are, then they will be certainly secured loans, right?
Could be not necessarily secured, because it would depend on the business which I am in. So they were in housing finance. So we should hope that it is largely secured.
Secured to borrowers, affordable housing, and to
Yeah.
builders.
Yeah.
So LAP and all that. So they are all secured. And normally the industry has just a 1% GNPA. 1 or 2%. Sometimes it goes to 3% and the recovery. Today, HDFC net NPAs are below 1%. Right?
Yep. Yep.
Even all the others, India Bulls and all, the GNPA is quite less than 5% and NPAs are less than 2%.
Right. So that's why from a loss perspective, from a EPS, obviously it has gone very bad, from 31 rupees negative to 112 rupees negative. Because
And
of
the
the
quarterly numbers, quarterly how much?
So quarterly also from 7.12 to 93.24. That's where the EPS has dipped.
And the loss?
Loss has also gone up significantly, because in Q4 they would have recognized this impairment charge. So 345 crores to 4,522 crores in the current year.
Loss.
Yeah.
And expenditure is 6,589 crores.
Yeah. Yeah. Yeah.
And income?
Income would be around 16 odd crores.
Again, 16 crores, they are expending 6,589 crores.
Yeah.
And what is the amount on salaries?
Salaries, I think it has consistently remained the same. So if you would see the 3 previous periods, it is in the range of 300 odd crores.
That is finance cost, right?
Sorry, so that's finance, but yeah, salary cost has reduced in fact.
So what is the salary cost?
Now for the year it is 16.65 versus 36.2. So it is exactly half.
So for the quarter is how much?
For
16
the
lakhs for a year. And for the quarter?
For the quarter it is 0.15 crore versus 14 crores of March 21.
So 15 lakhs is employee cost.
15 lakhs is employee cost.
And out of 6,589 crores total cost expenses.
Yes.
So what 15? So so 15 lakhs only. What about they don't have a team for recoveries, is it? Normally, efficient company, HDFC Bank, HDFC has one of the finest recovery teams.
Yeah.
India Bulls has the best recovery in the world. That's the NPAs are below 2%, 1%.
Yeah.
So are they not paying their employees?
I think people would be started to leave because of all the regulatory hassles that is going on. So I don't think they have good amount of employee base as well.
Isn't it quite a big anomaly? Huh? Company has, as of now, 120 of the sharpest brains on the panel, on their payrolls. Company has the sharpest brains on the board. Very, very well reputed people. Highly reputed board. And suddenly this expense, quite. I think I worth look. One should read every line in the report.
Yeah.
Quite 6,000 crores plus expenses. So what does it say in the report? Securities, guarantees.
So if I go to the notes, probably they would have given some explanation. Let's go there.
They had taken a guarantee of 3,000 crores from the group company Reliance Infra, which had disclosed in the annual report also. They had guaranteed 3,000 crores, which came in the one of the most reputed forensic auditor, Grant Thornton. About 3,000 crore guarantee by Reliance Infra on the loans.
Right.
So that invocation of guarantee is still pending, possibly, is it?
Right.
Or because of change in auditors, they don't see. Or do they go as per last year?
No, I think that guarantee thing is still pending. So here, I think they have tried to explain the entire crisis that they are facing. That they're saying that because of the ILFS crisis, there is impact on liquidity, and the company is adversely impacted.
ILFS crisis equally impacted everybody, including Kotak Bank and HDFC Bank and HDFC, right?
Yeah.
And that crisis is over. In fact, they have recovered over 60-70% of the loans already, thanks to their Kotak and his strong advice. And the professional team is put in place.
Sure.
There also employee cost came down, but there's a battery of high quality professionals, right? They did a great job in recoveries and ILFS.
Sure.
So what about this corporate guarantee of 3,000 crore Reliance Infra?
Let's see if I could not find anything here, but let me just recheck. No, there's nothing about the corporate guarantee.
So apparently from what this bank said, this will be that 37 entities reported by Grant Thornton, or maybe 107 entities reported by SEBI, that diamond structure.
Yeah.
So who looks into such issues? Who reads this? NFRA, SEBI, or?
So I think from a listed entity perspective, the first entity, first regulator to react would obviously be SEBI, right? And considering they are anyway being pursued by SEBI, it would obviously in their watch list. But
and also RBI and NHB also, right?
Yeah, RBI and NHB as well.
So what does it happen? Like in Shri, they appointed an administrator. So what is the normal process here from RBI angle?
So RBI angle, Manoj, to in one of the entities they had suspended the entire board and they have appointed its own board. So that I would say is a very rare situation. But in the normal course, the regulator would continue to put its trust on the existing management. They would take or initiate appropriate actions, but they would generally not let go of the existing management because ultimately they were present and they would be more closer to the facts. So the existing management continues. The regulator continues with its investigation, and after the investigation, whoever is the guilty, they are being taken care of.
So is it because Reliance Capital board was superseded? So was it maybe was it a wise step for the company to fast forward and make all these provisions? So even if the board gets superseded, so what? So the that 9,000 crores, at least the benefit is there with the promoter linked entities.
Well, it would be hard to say, Manoj, because ultimately, if there is a new board which is coming, it would have its own judgment, and if it is a board which is appointed by the regulator, they would try to be more conservative in that sense. So it could be possible that this impairment is influenced by the new board of the parent company also.
Okay. What other interesting things in the report, audit report?
Audit report, that's what I told you on the matter on SEBI as well as the matter on resolution plan that has been discussed.
They mentioned.
Other than that, there is nothing.
Oh, very good. They mentioned about it. What about balances with the banks? What is today liquidity available in the company?
Yeah, let's see if I go to the balance sheet. I have
Cash and bank balances and financial investments.
Yeah.
Particularly
So-
liquidity
so
and
my-
what rate they are given.
So cash and cash equivalent is around 2,600 crores.
What is this cash and cash equivalent means what?
So sometimes, Manoj, there are certain instruments which are not necessarily cash, but they are very similar to cash. For example, I hold investments, right, which are debt mutual funds, and I can redeem them immediately. So they are not cash as an instrument, but they have the very nature of cash.
Money
So-
market. So same day you can just
Similar to
issue a
that.
check or
Yeah.
a net transfer immediately.
Yeah.
So
Something
that
which
is how
is
much? 2,628 crores, is it?
total cash and cash equivalent combined, it is 2,628
And bank
crores.
balance is how much?
So this will include bank balances because cash will include bank. What they have shown otherwise is that maybe fixed deposits and all, which have a maturity period of more than 3 months. So that is coming here. So
That is how
net
much?
that is around 300 crores.
So total is how much cash and bank balances?
2,900 crores.
2,900 crores cash and bank balances. That is marvelous. No, excellent
Yeah.
liquidity with the company.
Yeah,
An employee cost of only 15 lakhs for the quarter.
for the quarter.
So they have lots of cash to employ some of the best teams, best CEOs, chief operating officers, and the best team to support the CEO who is a hardcore professional.
Hmm.
To take the company, as the auditor has mentioned, going concern to the next level in a positive way.
Correct.
Right?
Correct.
So money is there. Money is no problem. There is
Money
huge
is not a
money in the
problem.
company.
Yeah.
Only some regulatory issues are there and some resolutions privately of IBC.
Correct.
They are not gone to IBC because of delays in IBC in the COVID period. Now COVID is over.
Right.
So that's quite good. So much cash. And what about the changes in auditors? Do we come to know from the report?
No,
Earlier,
so we,
Pricewaterhouse was there. Pricewaterhouse had resigned from the company. The rating agency had said no cooperation.
yeah. So that is
And Pricewaterhouse is a very highly reputed auditor, very highly reputed international. They do a lot of good due diligence.
yeah. So this I could not find anywhere in their audit report.
So we had to go through the past audit reports, which would be on the
Yes.
company's website.
Yeah.
So this company had some of the finest auditors. Even the group company, Reliance Infra Power, some of them have good auditors like Chaturvedi and Shah.
Correct. So that's it, unless
Yeah,
anybody else have some.
Dushyant, some views from you, as usual, deep dive.
I think, yeah, what he's explained is quite nice. And what to further to say, add, I don't think, the facts are self-evident.
Now, what about you always look at it from an investor's angle and shareholders' angle? So today, shareholders are not getting dividend and appreciation, and also the bondholders are not getting interest, bankers are not getting interest. 9 banks have reported it as a fraud case.
Yeah, so that's what I'm saying, that when all these other agencies are after the company, and we don't have much detail, so best thing is to avoid this kind of a company. There are plenty of other stocks available. Why should one look at this company?
Manish and Mr. Ramprasad.
Hi, sir. Investor
And Mr. Ramprasad, you're also here. Your insights. Yeah, Manish.
if you look at this kind of figures, investors have nothing to say. Yeah. It's pure mismanagement, and it's being investors is being cheated basically. As investors are being cheated actually. And as Dushyant Bhai says, not to look figures of this kind of companies. There are much good companies are available in the market. Am I audible?
Yeah, Manish, you are.
Yeah. So let's not see. I don't see now this kind of companies at all for investment or any other purpose.
Manish, you have joined from two phones, is it, or 2 laptops?
Yes. That's because
Yeah, that's okay. That's okay. Just carry on. Let's have the views on a topic. And Mr. Ramprasad, also your insights on the financial reporting. Mr. Ramprasad? And any other expert observations could be quite interesting. It's a very good learning for everybody.
So while we are waiting for Mr. Ramprasad to join, maybe,
I am there. I'm actually there.
Oh, okay. Please go ahead, sir.
I think insightful. So we should try and I think one major observation I had on this presentation on Ledger or the Caro and all, the extensive documentation probably, Santosh, which is now required on each of these Caro points, particularly on the whistleblower, the work which is done by us, how do you demonstrate tomorrow to the regulators, etc. I think those are the critical points. Yeah. Those would be the additional comments from my side.
Caro, I think Ramprasad, actually, Nilanjan made a very incisive, presentation, and thanks for that. Actually, unfortunately, my Geo connection got dropped out for about half an hour, so I all of a sudden got, pulled out. So, but then great, Nilanjan, very nice presentation. Caro, I think the way it is shaping up, I mean, we are also, in the process of finalizing quite a few companies' audit reports and all that. That yes, the documentation, the review, so a lot of it is what we were actually also supposed to do, right? So, for example, whistleblower complaint. We were actually as auditors, as Manoj ji also earlier mentioned about fraud by the company. Whistleblower complaints, anyways, we were supposed to review, but we may not have done that out of whatever, maybe shortage of time or whatever. But these are some of the things that now regulator has, requested us to specifically comment on. So I think that is a very good thing. I see Reliance Home Finance balance sheet on the screen. I think I can only describe this as daylight robbery. This is nothing but daylight robbery.
Correct.
What
Subrat, I would like to welcome Subrat. Subrat, you are among the finest professionals, very well known in that banking circles. Subrat? Subrat, your views as a participant? Subrat, among the finest professionals, is here with us. Very rich bank experience in banks. Subrat? Yeah, till Subrat comes here. Carry on. Very good insights.
No, but I'm just worrying, Manojji, that even the media, see now since last few days, Reliance has been, their results are due, therefore media is pointing out that, Anil Ambani and Reliance Capital and all. But there should be some kind of a mechanism even within the media. So, what is happening with ABG shipyards today, or what is happening with Sri? So is there, any portion of analysts or media actually chasing? Because then, see, this is like a season, right? So, all of a sudden, then, media comes with reports that, this uska ye hua, uska ye hua. But is, are people tracking are certain sections of media tracking these things, regularly? So we seem to have forgotten about, for example, Diwan housing. What's happening with Island FS? I think there has to be some consistency in reporting. Right? We keep to forget a lot of things. I think. So that I don't know whether it's staged or whether it is by it's by default. But
Santosh, I would say, they are also kind of a couple of or maybe number of reasons for not following up on the stories. What happens is that there are always follow last in, first out. Some new story comes, the old story is forgotten. And why about these stories, financial reporting? You talk about other general cases also, like Sushant Singh Rajput. What happened? 1 year it kept on coming. These narcotics, more than 100 raids were done in Bombay. Now, what is the outcome of that? Now, nothing, nobody follows up and nothing is known. Neither the authorities are coming out with a report. Nothing is, coming further. So the things are dying the natural death. They only highlight a few days. They create some kind of a curiosity and they have that kind of, they do their marketing by these stories. I would say at the end of the day, they are more interested in selling their product rather than providing information.
No, I agree, Dushanji. But the only thing, and I totally agree with your examples and analogy also. But it is a little bit different, right? When you're talking about financial investors, let's say if I am a shareholder in Island FS or, this Reliance Capital or whatever, then at least I ought to know, on a consistent basis, कि इसका क्या हो रहा है. Suddenly it becomes a big news, and then after 2-3 months, then nobody is bothered. Even first page, 10th page of Eco Times also, there is nothing, no report.
Yeah. No. What I'm saying is that this is a kind of the reporters' priorities and behavior. For example, the latest one you take, this Ukraine-Russia war. Earlier, every day, so many things were coming. Now, last few days, I have not seen a single headline. And the war is still on.
Correct. अभी तो सिर्फ inflation है and Twitter वो Elon Musk.
So they give priority to the new developing stories, the latest news, and the old ones are forgotten and left. If you are interested, you do your research. That's kind of a thing.
Correct. So Subrat ji has mentioned in the comment box that this matter is sub judice and allow me to refrain. I think we should respect that.
Now, quite interesting thing is yesterday this came, a report was reported because it's last week's audit report. It got reported in many newspapers all over the country, including Economic Times.
Yeah.
So this is very lucrative, 3,000 crores of bank balances. 3,000 crores of
Loans.
guarantees by Reliance Infra, and Reliance Infra, as per the yesterday night, the report came, and which has got 1,000 crores of cash. And they also mentioned that they are getting 6 to 7,000 crores this month from DMRC, and around 800 crores from DVC. That is a top public sector power company. So this Reliance Home Finance with 3,000 crores of cash and bank balances, 3,000 crores of guarantees, a lucrative business, is on the eye of many this corporate raiders like Capri Global is very sharp. It's a listed company. They are looking at such companies to acquire at at discount prices and take opportunities, particularly when such audit reports are done, very clean audit reports. It's a big opportunity for them. They may get at over 5 to 10,000 crores of assets. Even other assets of 9,000 crores corporate loans today with ILFS showing recovery at how much percentage? Uday Kotak said they recovered over 60 to 70% already. So 60 to 70% of that company would be worth over 6 to 7,000 crores at least immediately. So Capri Global and listed companies. In fact, Kotak had also given his bid for this company in this private COC-driven resolution process, but did not go through IP. If there's a IP insolvency professional, then he would ensure there are proper bids coming. So far, it has not gone to IBC for whatever reason. If it goes to IBC, possibly a recovery could be over 6 to 7,000 crores. And many more bidders will come in. But SEBI, among the best regulators in the world, today they are on it. And everybody is waiting for the final order, hopefully clearing the promoters. Clearing the promoters, if the promoters get cleared in the next order of SEBI and they ensure 100% payment and penal interest as per the circular to all the creditors, it shows good times ahead for the group. And for the bankers also who have filed, I think 9 bankers have filed fraud case. Another thing is the forensic audit reports, they should give it to the trustees immediately. On a regular basis, they should be available to the trustees. If the report is not shared with the trustee, the company should go ahead and see the trustees have all the forensic audit reports, so they can say if forensic audit report is wrong, they can mention it is wrong, and that's the way they can fulfill their fiduciary duty. Right?
Yeah.
Mr. Ramprasad?
Yes, I agree, Manoj ji, with your observations. Yeah.
Lots of people said trustee is not having a copy of forensic report. Trustees are asking the company, and company is refusing to give the forensic audit report to the trustees. And as per Caro and this financial reporting, there has to be half-yearly reporting of security cover. And as per debenture trust date, also security cover is not being reported in time to the trustees. So what about the credit monitoring mechanism? Indian Bank has some of the finest monitoring mechanism.
But
their NPAs are low. So they were the first to report the fraud.
Which trustees? Your debenture trustees?
Yeah, debenture trustees. They have 2 trustees. There are 9 debenture series. On 7 of them, 6 of them is secured, 3 are unsecured. Catalyst trustees and IDBI trustees are there, and they have a fiduciary duty to see the reports that security cover is given to them on a quarterly basis as per the debenture trust deed, and they have a fiduciary right to enforce the trustee, enforce the security also.
No, so absolutely, and see, basically, as per the RBI regulations, also there are very detailed regulations which deal with frauds or potential frauds by HFCs or NBFCs. So that anyways, they have to share with the Reserve Bank, the NHB, as well as Reserve Bank of India. And it should be available to the trustees. Absolutely agree, Manoj.
And apparently there were lots of buzz. They were saying NFRA has stepped in this case. They have asked the auditors to give the response, but that is the previous auditors.
That is PwC, is it?
Yeah, some 5 years they were looking at it. Of course, this is the latest development, but they asked the previous auditors to give their observations. So, of course, NFRA being also a very respected authority with very good talent. So, we don't know how this has happened. Apparently, this could have been after the SEBI investigation report, which gave an interim order. So, that comes, and possibly some bankers are also, anybody today can complain to NFRA on this NFRA portal. You get a response, a number within 2 minutes. Anybody can complain, possibly bankers have complained, but so far it is a question on the previous auditors based on the past report. This audit report is clean, so possibly management has got full intentions to come clean and to prove to the courts it is not a fraud, and to distribute this 3,000 crores and a corporate guarantee of Reliance Infra and recover this 10,000 crores possibly. So possibly would it come next quarters as a recovery and EPS will be very high when the money comes from Reliance Infra through invoking corporate guarantee? So then it will be 3,000 crores as income, correct?
We need to wait and watch, Manoj, because ultimately all these regulatory cases they tend to get delayed. We know the regulatory numbers that we see on pending cases and all. So I would not be very optimistic to say that in Q1 of next year I would see a 3,000 crore of income. I would say to be a very remote case.
Possibly it could be split over the next few quarters.
Let's see.
Reliance Infra has repaid 1,700 crores of debt last quarter. They got money from DMRC. They cleared 7,700 crores of debt. And only another 3,500, 4,000 crores of standalone debt is pending.
Yeah.
And the promoter said it will become a debt-free company next quarter.
Yeah.
And have another 3,000 to 4,000 crores ready. So interesting. Wait and watch.
Yeah.
That is the way to go.
Yeah.
Something on Canfin, Axis Bank also.
Yeah. Or should we conclude on this Reliance Capital bit once and then we want to move to Canfin?
Yeah, we can go to the next one.
Okay.
Yeah.
Okay. So for Reliance Capital as well, I think the report came out on May 10th. And here the auditors have given a qualified opinion. If I would go to their opinion first, there's a series of qualifications. So the auditor is Gokhale and Sathe, again a Mumbai-based firm, and they have given a qualified opinion on a couple of matters. They have talked about the CIRP or the corporate resolution process, and the outcome is still awaited. So that is one of the basis for qualification. So so it is hard to know at this particular point in time how much is the amount of adjustment that would come up from the resolution process. So that's the first reason for qualification. Second reason is that they have not recognized interest expense for a particular time. So the last interest expense that they have recognized was till December 21, and after that till March 22 they have not recognized interest expense, and that interest expense amount to 491 crores. Again, there is a statement on the intercreditor arrangement uh, which is again a regulatory matter that has been going on. This is basically a fact that is coming up from the Reliance Capital standalone financial statement itself.
So
Uh,
here, this is a qualified report.
Yes,
Yeah.
it's a qualified.
So auditor has done a better job. Maybe they have verified from independent sources. And RHFL board is smarter. They have ensured no qualification and a very, very clean report.
Yeah.
So they have RHFL has a lot of cash. What about the cash and bank balances here?
I'll go there. Yeah. So from a balance sheet perspective, sorry.
And Reliance Capital has got some of the finest and most profitable financial sector companies. Life insurance joint venture with Nippon, one of the finest players.
Yeah.
General insurance, Reliance Securities, which Anmol Ambani is personally spending a lot of time on. Reliance Security has got huge business. Today, Angel One has a huge market cap, thousands of crores, and Reliance Securities has got much more digital initiatives. It is only not a listed player. If it goes for listing, possibly it can get much more valuation than Angel One.
Yeah. So from a balance sheet perspective, Manoj, they have around 1,400 crores of cash.
Oh,
Okay.
that's very good.
And they have investments of around 44,000 crores.
Oh, so cash is going up. It is from 567 crores to 1,000. Yeah, 1,500 crores plus, right?
Yeah. And this is the consolidated balance sheet.
Yeah, wonderful. To 1,500 crores of cash and 44,000 crores. This is what often people say, the life insurance business worth over 20,000 crores, general insurance over 15,000 crores.
Yeah.
Reliance Securities and ARC business.
Yeah.
In fact, ARC business is thriving. We had discussed earlier. ARC has done bidding for Punjab and Singh Bank and other ARC's assets just last month.
Yeah.
But here board is superseded. Have they mentioned about the board is superseded?
They have mentioned in the notes also, and also in the if I could go to that note.
The Reserve Bank of India has nominated directly.
Yeah. So they have mentioned that.
And what is the qualification they are given?
So the qualification is one on account of non-recognition of expense from December 21 to March 22. They have not recognized any interest expense, and they have also qualified the fact that since the corporate insolvency resolution is going on, what would be the amount of liabilities which will ultimately come up from that reconciliation is still pending. So the impact of that activity is not known.
Okay, fair enough. Here, HDFC and over 50 bidders are there.
So here is the note on
for their businesses.
Yeah. So here is the
or
note
the parts of the businesses.
Yeah.
Acha, this is CRP under insolvency.
Yeah. So here
so there is a administrator, a very reputed administrator, I believe, right?
Yeah.
Mr. Rao, who is a renowned banker. And also people from the Tatas, also on the advisory board, right?
Mr. Subedar, no? Or Mr. Kadle.
Mr. Praveen Kadle. He was a CFO of Tata Motors.
Tata Capital.
And then he was heading Tata Capital.
Yeah.
So possibly it will be nice if companies like Tata's, who are known to be very reputed players and play a fair game. They took over Air India, they took over VSNL, and I got good plans in technology space. So if they take over or HDFC takeovers, then it is good for the whole financial and global markets.
No, but then Manojji, that is a bit of a difference because the nomination is by RBI and these people are ex-Tata. So I think they have been appointed as directors in their personal capacity. So I think it doesn't mean that based on their experience and reputation, etc. So I don't think we should, read it as Tatas are, doing anything interested.
And luckily, HDFC has given a bid
Yes.
for this. And some of the best players have given a bid. Over 50 of the best players are given a bid.
So one thing which I wanted to highlight, and since Santosh and Ram Prasad both are around, I was a bit skeptical whether, the audit opinion being qualified, is that appropriate? Because if
Could have
I,
been a disclaimer, you mean to say?
no, what I meant was, Santosh, if I just look at the number, they have said that from December 21 to March 22, there is there should have been an interest cost of 491 crores, right? So before that, if I see, my loss is this number, 7,900 crores. So is it, I am yet to book around 490 odd crores, right? So does it still make sense, right, to have a qualified opinion? So I was only worried because if I look at it from a number perspective, it will be roughly around 50%, right? 790 ka half, right? So I was not sure whether the conclusion that qualified opinion is appropriate, that I thought I will just check.
So
with
you're saying
you
it's
and-
not very significant on a relative basis?
No, it would be significant, na? Because around 491 crores would be how much? Would be around 30-40% of my loss.
Correct.
So can I still say with a 30% or a 40% misstatement, my qualified view is still appropriate?
So you are telling, could it be a potential adverse opinion?
Could be, but could be. I don't
My
know.
the only concern normally in these adverse cases, no opinion cases.
Yeah.
Nilanjan, my experience is that there is a difficulty in the auditors having full information. So that is why
I agree.
within our fraternity, we oscillate between a qualified or a disclaimer. The adverse is when you have completeness of information and you are very authentic and sure about your opinion. So actually, from an auditor's perspective, is a little safe giving it as a qualified opinion. Maybe you would have taken a bit, I agree with you, would have taken a safer route. But I agree with you on the point that if there is a completeness of information from an audit angle that I have nothing else now to be given by the management and I've got all the data points to evaluate, then absolutely agree with you. Ideally could be a disclaimer because the swing is too much.
Yeah. Because, and Ram, why I was mentioning this is that because they have quoted a number, right? They have said that my loss should have been higher by 491 odd crores. So I have a quantified number sitting in my qualified opinion itself, right? So
I think I saw in the first qualification, unascertainable. So
so there were two qualifications. So if I would go down, so I'm not talking about the first one. First one I can still understand that there is a process which is still undergoing.
Correct.
Right. So that is point number one. But if I come to this point number 5, they have said that such interest cost has not been recognized, and they have quoted a number.
I agree with you, but my observation on that would be, in case of adverse opinion, on all aspects, we have full information with us, Nilanjan. That would be the stand the auditor would have taken. You can't give partial views on subject matters. So on overall basis of qualified opinion, my view may look appropriate. Although I agree with you, the amount is extremely significant. The good that they were qualified, they've also given the impact of the number, saying that had this been there, this would be up by this. So I think that way they are. So I think this also raises a very big question for us in the audit regarding the complete information we have with us, the risk we are also going to be taking in a lot of matters. Good point. Good insight you are raising.
Very good insights. Very good. We are going through a deep dive, so many in the limited time, so many observations which could be useful for the whole stakeholders, shareholders, debenture holders, auditors, internal auditors, particularly because auditors often depend on internal auditors, and also inspections by RBI, NHB, SEBI. So they can also look into, the details. They also get very limited period to do their inspection. So great work, great insights.
So then maybe we can move to Canfin, the last one.
Yeah, sure.
Canfin, and also what happened in Canbank, because they had to answer lots of questions regarding Canfin.
Yeah. So Canfin, if we would all know, it's a subsidiary of Canara Bank, and there had been whistleblowing cases where the I think 37 odd accounts have been questioned, and which has also insisted the parent company, the Canara Bank, to institute an investigation. Recent news, I think, that has come up. From a financial reporting perspective, their audit report for March 2022 is clean. I could not find any observation as such in the audit report. So if you can go there, it's a clean report that they have given. Yeah, but
Totally
as and when,
clean. Totally clean.
totally clean है इसमें. And the aspect which is coming in the news on fake income tax reports and the 37 accounts being potentially NPA, right? So that is not featuring anywhere, neither in the audit report nor in the notes.
So what happened in 37 accounts also is not mentioned.
Yes.
One can give a clean report mention about it, because what the company said is 37 accounts sanctions are given on basis of bogus income tax returns.
Correct.
Given by agents.
Right.
Not necessarily by the people who have taken loan, but by agents, because they deal through agency network. And ultimately this was detected because of somebody came to know there may be hundreds of such accounts.
Yeah.
In other branches all over India.
Yeah.
Possibilities.
So there is not a single observation at all.
Nothing.
Okay, good. You have seen the report. Yeah, Nilanjan, Mr. Ramprasad, you are saying something. Your observations?
No, I think I think Nilanjan's point during Caro was that in case you were aware of it before they did the audit report, ideally you should bring it so that you are also covering yourself. You can say that we have received information. We could not proceed with it because of lack of this thing. We are unable to come, and would be the most safest way of approach I would do as an auditor. I think that's something that probably one can consider. So
yeah.
We do not.
Right, so we know the auditors have seen the aspect at least. So we come to know their views with whatever of them are at least. Yeah, that's an interesting observation.
Yeah.
Santosh, your views?
Who are the auditors, Nilanjan?
The auditors, Ram, he is, well, let me just go down. He is, so there are two joint auditors.
BK Ramdhan, Sham, okay.
Yeah.
Srinivasa Rao, okay. Bangalore. I think you see they signed the report interestingly on April 29. And information would have come after the signing of the report. Possibly,
could be.
Possibly. Very. If the whistleblower had come after April 29th, then I think the profession are safe.
Yeah.
It's very.
So good. Any observation or anything that?
Yeah, Santosh, your observations. Acha, I'll just mention my battery is little weak. It can just go anytime, but have a proper discussion. I'll just join back if it goes.
Sure.
Yeah. Santosh, you are there?
Seems I just stepped out.
I think Santosh would have stepped out.
Oh, he's still there. Yeah, okay. Let's go to the next one.
So other than we had the Canara Bank is still clean because the statutory, the subsidiary is also clean. One thing that we also wanted to discuss was the Axis Bank issue, right? Where there are media news on Axis mutual funds about certain officers front running the mutual fund schemes, right? So there are news that is going on that prior to making bids by the Axis Bank mutual fund, the senior person who were aware of making those bids used to enter a bid at a personal capacity level, right? So these bids were in large numbers. So it is not a significant, it is not an insignificant number, but this bid was large, right? So even though apparently somebody can say that there is no impact from Axis mutual fund perspective, but what the news is coming up is that by doing this pre-bidding by senior officials, you're actually distorting the market price. So what is happening is that if I'm supposed to bid for 100 rupees, the price would have anyway gone up to 105. So the price at which Axis mutual fund would have purchased those shares is anyway distorted. They are paying a higher price. So hence that is still being discussed and looked at by the various regulators. Yeah.
So that means a loss to the unit holders and loss to the AMC also.
Yes.
So these are all very, I would say,
I think Ram, the word that you're looking for is innovative.
Innovative, yeah.
So somebody can always argue that there is no direct loss to the company, but yes, there is a loss, right? Because ultimately, why will I pay 5 rupees more for somebody which is available to me at 5 rupees cheap?
I think when you look at everything illegally, this is a problem.
Yeah.
Yeah. Very interesting. I was just reading it with great interest. Yeah.
So that's it, Manoj. I had to cover. In case anybody had some, maybe Dushyant, Manish.
Excellent insights. Excellent. Superb. And this is a learning for all. For the every day today, many reports will come every day. Ultimately, thousands of reports will come in the next before 30th of May.
Yeah.
Because there is a time limit of 60 days for this is the annual.
Right.
No, absolutely. Sorry, I had to attend a call, but no, Nilanjan, this is great.
Thank you, Santosh.
Kind of companies that you have.
It's quite very, very interesting and quite insightful. The sort of reports you picked up are quite, I think, elaborate. And they focus more on the financial services sector, but nevertheless very interesting. And the one on Axis Bank probably something people should look at with caution on other mutual funds. Because the practices could be the same. And as a chief dealer, you are actually not, everybody's trusting you with their money and you're expected to work for the unit holders than work for yourself.
Correct.
It's, I would say, as sensitive a position as a start auditor.
Yeah.
I don't think I'll put it any less.
Just on a lighter note, Nilanjan, this is also a bit nostalgic because in the previous job, we used to do, in our team, we used to do this regular internal meeting called dodgy accounts or dodgy audit reports.
Okay.
So, and then we used to just look into, all these balance sheets like Satyam and, ones which are. So there's a lot of learnings from those.
Sure.
As you rightly said, qualified opinion, these are actually the ones where those auditing standards and reporting standards are actually tested, right?
Exactly.
Clean multinational company, clean company, you will not have any great insights, but wonderful.
Yeah. Good.
Great insights. Incidentally, Manish had one presentation on Venus Pipes IPO.
Yes.
Manish, would you like to do that?
Yes.
Briefly, yeah. I think we spend another 10-15 minutes on it. 15 minutes.
Sure.
Next Saturday, many more companies and a little focus on small caps, SME also, right? So they also get benefit of the detailed insights and deep dive.
Yeah, you can see the screen. Venous pipes and tubes, IPO analysis. I'm audible, right? Hello. Hello.
Yes, Manish bhai, we can.
Yeah,
hear you.
yeah. Sorry. Yeah. This company of small IPO had come. Yesterday was last day. 3 days IPO time. Only 165 crores they have raised, and that is also a fresh issue. So it's more than 16 times oversubscribed yesterday. Our team member details, who are contributing, who are helping, are taking care of all the things. Our standard disclaimer. So everybody has to take their own decision. This company is based on Bhuj, Kutch. If you see, most of the pipe manufacturing is there in Kutch, Gujarat area. Wells pipe is also there. Ratnamani pipe is also there. So they do pipes and tubes and all steel products they manufacture. This company actually started in 2015 only. They manufacture steel. 1 minute. They manufacture stainless steel tube products into broad categories: seamless tubes pipes and welded tube pipes, under which 5 categories of products are manufactured, namely stainless steel high precision and heat exchanger tubes, stainless steel hydraulic and instrumental tubes, stainless steel seamless pipe, stainless steel welded pipes, and stainless steel box pipes. So they have a plant at Kutch with an installed capacity of 10,800 metric ton per annum. Company sells products in both domestic and international markets. Venous pipes and tubes exporting to almost 18 countries, including Brazil, UK, Israel, and countries in European Union. So they may be using Kandla port or Mundra port for exports of all this material, because logistics cost is a important cost in this. These are the competitive strength because they have a lot of international accreditations, specialized in production of stainless steel pipes and tubes and customer diversification, and they have experienced and qualified team. They actually they have come for IPO because they are financing. They are coming with they are increasing the capacity of with 106 crore rupee project cost, and they are doubling the capacity from almost 10,800 to roughly 22 to 23,000 metric ton per annum. This is 100% fresh issue of 165 crores. Pre-issue holding is 64 crores and post-issue holding would be 48%. There are basically 4 promoters. The promoters holding would be less than 50% after the public issue. This is the public issue. IPO price is 326. As I said, issue size is only 165 crores. Here, retail shares offered are 35%. So definitely, if the IPO price or IPO get listed at say 20% upside, there will be a selling pressure on the listing day. They have this kind of business model. They are manufacturing products into two broad categories: seamless tube pipes and welded tube pipes. Currently, they have 5 production lines containing so many products of stainless steel high precision and heat exchanger tubes, stainless steel hydraulic and instrumentation tubes, stainless steel seamless pipes, stainless steel welded pipes, and box pipes. They have a brand called Venus, under which they sell the product to various sectors. This is the history of the company. Company incorporated in 2015, and they come to the public issue at 2022. In 7 years, they have made a good progress, out of which last 3 years were profitable, because we have a data of 3 years and all the 3 years are profitable. A good progress that in 7 years company has coming in for a public issue. This data is in millions. So share capital is 15 crore as on date. Net worth is 120 crores. Revenue is 276 crores for the 9 months, and profit is 23 crores for the 9 months. So they have a net profit margin of around 9 to 10%. Basic earning is 15 rupees for the 9 months. The net asset value is 79 rupees and they're asking 326. So roughly 4 times money they're asking from the public for their IPO. Total borrowing is just 50 crores. 50 crores is a very small amount compared to the turnover, compared to the net asset value, compared to the net worth. This is that capacity and utilization. If we see 9 months figure, the current capacity is 10,800, which is almost 91% capacity is being utilized. So whatever company is implementing new project, definitely the turnover will go almost double than this. Today it is around 300 crores per annum, which will go to almost 6 to 700 crores per year after 1 or 2 years. They are completing their expansion in 2023. Similarly, they have done like other companies, they've issued a bonus issue. Bonus issue, I could not find what was the ratio, but they have just done issued a shares in October 2021 at 280 rupees. And then they have issued before that, they have issued a bonus shares. Company strictly says that they have only 2 competitors identical to them. One is Jindal So and another is Ratnamani Metal. Ratnamani Metal is a quite bigger company compared to the Venus Pipe. You can say almost 10 times because their turnover is almost 2,341. And Jindal So is much bigger than Venus Pipe. So their PE ratio, Ratnamani is having good PE ratio of 41 times, and Jindal So is having 10 times. Some other companies' data are also there who are into these sectors like Shyam Metallics, Apollo Tricot, Godavari Power, Welspun Corp, Jindal Stainless Steel, but they are not same as Venus Pipes, but they are all doing profitable. All companies are profitable. As you see, they have a P ratio. You can see a promoter cost is just 34 rupees and 17 rupees. Almost promoters are holding, there are 4 promoters and they are holding 64% pre-issue. You can see the debt position. Debt position as on date is just 50 crores, out of which long-term capital, long-term borrowing 16 crores and short-term working capital borrowing is 33 crores. And you see that profit for the 9 months is 23 crores vis-a-vis short-term borrowing of 33 crores. So they are well versed in a position to pay the interest. There is no stress on the figures at all. The debt equity ratio is also 0.42 times. Cash flow is negative sometimes, but that may be because of increase in working capital probably. Per share for the 9 months it is 15 rupees. For the whole year 2021 it was 18 rupees. So last 2 years the performance has gone up quite well. It shows that there definitely this company will make a good progress. Return on net worth is also very good. I said net asset value is around 79 rupees is on date. This is what one slide Ministry of Commerce is giving, that India, that it shows that SS pipes and tubes, what is the exports, what is the imports, and what is the net import. So we are basically a net import company, net import country for SS pipes and SS tubes. This is the export import, like exports we are doing to the Italy, Spain, France, USA, Netherlands, and other countries. Import basically we are doing from China 54%, Vietnam 15%, Italy 4%, like this. So there is a clear-cut mismatch between export import. This slide is very interesting, though it has nothing to do with Venus pipe. But if you can see that these are the figures which gives that crude oil average price in 2015-16, it was only $46, vis-a-vis today $108. And these are the total import, domestic production, total crude oil of the country for the country. So even till today, we are 85% crude oil is being imported and 15% crude oil is being generated from Indian soil. This is the manpower strength. Just 1 minute. Sorry. Manpower strength is 200 employees is on date. This is actually good company, small public issue. Any questions?
I think Manish bhai, what is that scheme called? This Jal Se Nal Tak scheme of the government, of having all the households, especially in the rural areas, access to fresh water, running water. I think that all these companies have been, benefiting, and I think this is, it's obviously there is a fair bit of potential and promise in such companies.
And when turnover will become double, it will provide a 10 to 13% net profit margin.
Right.
Roughly, I would say that they will provide a very good results after 2 years or after the completion of projects.
Correct. And these are like very lucrative projects, because
yes,
once you are in the government, you're empaneled government supplier, then you are basically, you don't have much of a
correct
cost.
Correct. The results are very good actually. They have not made any loss or anything in 3 years.
Yeah.
Rather, it's really good management that 2017 they have started the plant, and in all the years they have made a good profit. And there, if you see, the debt equity ratio is quite low. 4.42 times is a very good figure.
How does this compare with companies like Prince Pipes, all the listed ones?
Prince Pipe is doing mostly PVC actually.
I see.
Prince Pipe is doing
more like a plastic. Okay.
More plastic. PVC means plastic.
Correct.
They are basically these two companies, Ratnamani Metals and Jindal. So they are making this similar products. But Jindal again is a very, very big company.
Correct.
Even Ratnamani is quite a big company.
Quite
and
big,
then the
correct,
Venus, quite
correct.
big, very big difference is there.
Correct.
But only good benefit of this public, this company is it has a very small public issue.
Yeah.
And we have seen last 1 year, 2 years, small public issues are more successful than the bigger public issue. Some
Right.
sort of traditional company.
Correct. Correct.
Anything to discuss? Manoj bhai.
I think Manoj Bhai is, I think his laptop's battery was.
No problem. There is one more company is coming in IPO 17 to 20th, Paradeep Phosphate. It's a, we can spend 10 minutes for that also, if you wish.
Sure.
It's a good non-urea based fertilizer company where government is also, just 1 minute. See, Paradeep Phosphate, they are coming with IPO on 17th of May. It's a making fertilizers which are non-urea fertilizer. This is our digital team member. This is our standard disclaimer. Paradeep port, we know this port is based in Orissa. And this company is based in Orissa, Bhubaneswar. And the promoters are Zuari Group, Zuari Agro, and the government of India, means president. This company was incorporated in 1981, manufacturer of non-urea fertilizer. They basically produce 3 grades of nitrogen, phosphorus, and potassium fertilizers. It's a second largest non-urea for manufacturer of non-urea fertilizers and diammonium phosphate. The short form is DAP in terms of volume sales. This company is based in Paradeep, Orissa. Includes a DAP and NPK production facility, a sulfuric acid production plant, and phosphoric acid production plant. The facility can store up to 120,000 metric ton, 65,000 metric ton, and 55,000 metric ton, and 35,000 metric ton of phosphate, rock, phosphoric acid, sulfur, and MOP respectively. The company establishes an extensive sales and distribution network with a strong presence in eastern part of India. And its products are being sold across 14 states in India through network of 11 regional marketing offices and 468 stock points. Company has a network including 4,700 dealers and over 67,000 retailers, serving over 50 lakhs farmers in India. So their products are being used by 50 lakhs farmers. These are the competitive strength. Since old company, they have managed this. IPO is coming on 17th of May, 100% fresh issue. They are, part financing acquisition at Goa facility. This company is coming with a new facility at Goa. Face value is ₹10. IPO price is 42. Sorry, this is not 100% fresh issue. Part is offer for sale. So around full issue is around 1,500 crores, out of which 1,000 crore is a fresh issue. This is what they are using. They are going to use the funds. They are coming with 520 crore to finance the Goa facility. This is their past performance. Their equity, the negative side of this public issue, they have very high equity of 575 crores and new equity of roughly 2,250 crores new equity will come. So net equity will be equity will increase to approximately 800 crores. And the current net worth is 2,188 crores. They have revenue of around 6,000 crores and profit is around 360 crores for the 9 months. So roughly their net profit margin is 11 to 12% of the total revenue. The good point is company is coming with a public issue at rupees 42 rupees and company net asset value is 38 rupees. So almost company is doing public issue at the net asset value. Borrowings is around 2,240 crores, which is debt equity ratio is 1:1. For a fertilizer company, debt equity of 1:1 is not bad at all. These are the data where their production of volumes and volume sold. We can see whatever they are producing, they are able to sell the whole inventory. So these are the all listed companies. If you see, none of the companies have like all the companies have PE ratios, which shows that all the companies are making profits. Recently, their margins have also gone up. I have personally studied GNFC, GSFC, which has made a good progress in terms like even share market. GNFC was 200 rupees. Today it is 600 rupees. GSFC was, traded at 60 rupees in 2021. Now it is 144 rupees. But all the fertilizers companies are making profits in 2021, 2022. These are another listed companies with a different, points. Government of India got at 10 rupees value, and the another promoter Zuari, they got a shares. Their average cost is 7 rupees 36 paisa. Promoters holding right now is 100%. Oh. Cash flow, they have a negative cash flow in between the years, but company is profitable. This is the data of earning per share. They've earned EPS, earning per share is positive for the last 3 years. Return on net worth is also at good value. See, the net asset value is as on 38 rupees and company is coming with a public issue at the rate of 42 rupees. These are the key players in India who are manufacturing phosphoric acid production. We basically do a lot of production also we do and import also we do. There is a still mismatch in production. So company will not face any issue in selling their products. These are the production of key players. You see that IFCO, National Fertilizer, and RCF, these are the 3 players which are very big in the market, and all other players are small compared to them. This is a very small presentation because this company में ऐसा कुछ खास है नहीं. It's a traditional company. This is also good public issue according to me. One should apply. I'm going to apply it. Any points? Ram Prasad ji.
I think the pricing looks pretty attractive. You are very right.
Yes.
I think a couple of good observations are that they are able to sell their entire capacity. Whatever production they got, they are able to sell.
Correct.
Established player, Paradeep Phospates. So it's a good opportunity for it to own a piece of the pie. So I think that those are the 2 observations, and it has a goodwill amongst the farmer community in a big way.
Yes.
Phosphoric acid, apart from urea, phosphoric acid has always been a backbone of our agriculture. This thing. Normally, we used to import from Jordan, which is the biggest player. And they have the entire suite of phosphoric based products, MOPs, your phosphates, etc. It seems to be a fairly good issue, given the
Fairly good issue, right?
fairly good issue, and the competes also are trading at a fairly low PE. So I think that seems to be a very attractive one, actually.
Yes. It's a good public issue. Some of the people who are applying should apply. Any more questions? I think Manoj Bhai is left.
Hello.
Yes.
What is the ownership? What is the ownership pattern?
Sir, ownership government of India है और Zuavi Agro वाला जो group है ना, they are the part owners. I tell you, government.
What is the percentage stake of each?
I tell you, sir. Government is government is around 19%, and Zuavi Agro people have around that group is holding around 80%, and
80.
somebody is 80, and
80.
some part 80, yes.
Okay.
So good public issue. Family बहुत दिन के बाद देखा मैंने ऐसा fair issue आया है. Public issue है people are charging 3 times, 4 times than the net asset value. This is the first project which you can see it's at almost at net asset value, par value.
What is the dividend yield?
So dividend का कोई detail नहीं है इसके अंदर, but definitely company will give a dividend.
So last year there is no dividend.
I have really not seen dividend because शायद दिया भी होगा, देखा नहीं है मैंने.
So what is the last reported EPS?
Last reported EPS was 4 rupees something. For the 9 months, it was 6 rupees EPS, and March 2021 it was around 4 rupees EPS.
Okay, so valuation is attractive.
Valuation is definitely attractive. 42 का अगर price है, so there are chances this company may, if market is good, this company may listing at 50-55 rupees.
And the industry is doing well currently.
Industry is doing well because agricultural sector is doing well. Other company share price, which I was following, GNFC, GSFC both, they have done very good. They have shown a very good financial produce of financial reports in last 2 years.
But GNFC is now known as more as a chemical company. So chemical
correct. They have a chemical sector also. Correct.
So this company, is this a pure fertilizer play?
It's a pure non-urea fertilizer, phosphoric, nitrogen like this.
And no chemical segment as such as of now?
No chemical. Correct.
Okay. Because earlier other companies had diversified into chemicals, GSFC also, GNFC, and somehow some of the chemicals got very high margins and massive.
Correct. They are coming with new plant in Goa facility. So they have ready-made market. They have all infrastructure into the place for selling their products. They are selling into almost 11 states. So then there is no issue actually.
So Zuari acquired this company. What is the background?
No, it's actually joint venture between Zuari Group and Government of India, where it looked like that government, Zuari people are managing this company.
So are the Birlas on the board?
Sir, वो सब नहीं देखा है, frankly speaking.
Okay.
But it's a traditional good company actually.
Okay. So with a margin of safety.
With a margin of safety, yes, definitely.
So interesting. So we covered lots of companies.
Yeah, we today covered 3 IPOs, no?
Yes, and many results.
Yeah,
Many
definitely.
results.
That He has given a really good presentation.
Excellent.
Every investor who is investing money should study like this. What Nilanjan has given actually.
Quarter to quarter, each page.
No, I
Balance
actually
sheet,
do
P&L, cash flows,
around
reports. notes.
I around do like GNFCs, GSFC. I have done for 3 years, quarter to quarter, all annual reports. It's really interesting.
So in future, we'll have a sector review also, maybe after a couple of months. After all
Sure.
the results are there, we can have a sector look also.
Sure.
Yeah, I think that's a good idea. Manojji.
You know,
Particularly,
last
there
time,
will be some thematic, trends in, sectors like NBFC. They are just coming out of restructuring and COVID and all that. FMCGs. You should also do something on Jet Airways, the revival story, one of the rarest, instances across the world, not just in India, that an airline has been, is being turned around. That is also something which is.
On an anniversary, finally it took off.
Yeah.
And incidentally, when we looked at NBFCs today, Canfin, RCap, HFL, Aditya Birla Capital gave very good results last night. It just came in, and they keep on doing better and better. And they had given an earlier vision for FY24, and they are given a presentation. They are nearing their vision, and very good performance based on the plans they have shared on a YOY basis.
recently the CEO has changed. Now Ajay Srinivasan has moved out.
Yeah, and a very well-known professional has joined. Ajay
Yeah.
Srinivasan was there. He came from ITC Group. They had a company called ITC Classic in those days,
Okay.
which was merged.
But
And
I tell you, they have lot of business, Aditya Birla Capital, but the negative point, their equity is very high, almost 4,200 crores. So
in financial business, the bigger the equity, the better is it, because they have huge businesses. Life insurance company that has done very, very well. And if we do a segment reporting, maybe in future we can look at it. They have done very, very well. And the health insurance also a new business. There is a very good growth in revenue.
Yeah, they are into many businesses actually.
So lots of results coming, lots of deep dives, quite very, very interesting.
Correct. So, sir, with this we shall close the session.
I think wonderful insights, Manishji.
Good insights, Manojji, Nilanjan, Santosh, Manishji. Yeah,
Thank
very
you.
useful. Yeah.
Thank you.
Thank you.
Thank you.
Thank you. So shall we, Dushan bhai, you want to say something? Dushan bhai. So with this, guys, we are closing this session.
Thank you so much.
We thank you everyone for joining, and have a wonderful weekend, sir. To all of, have a nice day.